RMB debt and other product offerings. For the first 9 months in Hong Kong, we have launched central bank debt, which is at the level of 30 billion yuan more compared to last year. So we have launched a number of connectedness measures to promote better connection of services so that we can better serve the 9 cities inside the Greater Bay Area. And we have attracted more people to set up bank accounts and provided a lot of convenience for residents in Hong Kong and Macau to live and also receive education and work in mainland China. SIF has been set up, and we have reached 113 organizations facilitating international trade and investment across the border. And we have also set up e-payment platforms to promote the Greater Bay Area in terms of safe and convenient cross-border payment and transactions. We have been working very closely with many institutions. For example, we have covered many enterprises in Shenzhen. We have offered bank financing to many institutions across the border. We are looking at unprecedented uncertainties and fluctuations around the world. This year, we are talking about tracking forward into unknown and fluctuating terrain. I trust that Hong Kong will continue to play its important role, not just as a very attractive financial center, but also we are going to work together with government departments to render our strongest support to Hong Kong so that we can make contributions to the Greater Bay Area, so that we can have high quality development. We can facilitate cross-border activities and investments and improve the overall investment environment. I understand that you are all financial leaders from around the world. We look forward to deepened interactions and exchanges with all of you so that we can all create a better future for Hong Kong as a financial center and create great premium to China as well. I wish this forum or the summit a great success. Thank you, Mr. Lu. Now, let's invite Mr. Zhou Liang to talk about how we can further promote the development of our financial sector and foster Hong Kong's position as an international financial market.
Work is a pain in the apps. My files are in this app. My chat's in this app. Projects in that app. Oh!
Wow. You're really working your apps off, Daniel. You need ClickUp. ClickUp is the AI-powered work platform that unifies your entire team and all your tools together in one place. No, not like that. No. It's a single place for your projects and docs, whiteboards and dashboards, calendars and chat, so your work goes from scattered to seamless. Plus, you get a fleet of AI agents to help you move at warp speed to get more done. This is the future of work. With ClickUp, it's like having your own assistant.
ClickUp, what should I focus on today? Okay, schedule time to work on these tasks.
I want an assistant.
We've been over this, Greg. Before ClickUp, your work apps couldn't talk to each other. With ClickUp, a project can go from a whiteboard to a doc to a task to your team's chat. That's because all your work tools speak the same language. Unlike you and the night cleaner.
Thanks, I've been working out.
ClickUp turns your projects on autopilot with AI agents that assign and prioritize your team's tasks. So the work is visible and everyone knows what to do, even Randy. ClickUp is like your work bestie, who always has your back.
The intern is taking all of that on?
Good for her.
ClickUp? What did I just agree to in that meeting? And how do I do that? Okay, send it to my team for review.
ClickUp streamlines work. From fast-moving teams to multi-billion-dollar companies. See how the future works. Get ClickUp for free today. I mean, look at Keith. He's using it. He loves it, right? He can't hear me. It's all right.
Your email is your first online impression. Make it count. With GoDaddy Email, you get a professional address that matches your domain. It builds trust, boosts credibility, and helps grow your brand. Setup is quick, and your inbox is protected with built-in security. And if you ever need help, we're just a call away. Start building your brand, one email at a time.
Distinguished Chief Executive Lee, Mr. Xu, Mr. Paul Chan, Mr. Eddie Yuan, distinguished guests, ladies and gentlemen, it is very honored for me to attend the 4th Global Financial Leaders Investment Summit. Mr. Xi Jinping attached great importance to the long-term stability and prosperity of Hong Kong and has made a series of important instructions. And Mr. He Lifeng has already made a speech through the video, and we will continue to implement the instructions accordingly. As we know that the 4th plenary session of the 20th CBC meeting has already summarized the achievement of our country, which includes the important part of the achievements in the Chinese mainland and the financial system here in Hong Kong. I would like to summarize it in 4 aspects. The first one is the high quality development of the the financial industry. As we know that the banking and insurance total asset has exceeded more than 500 billion, and as the world's first biggest banking market and the second insurance market, we have seen great performance. The trustees and insurance asset management companies are managing more than 10 billion, and there are more than 143 of them are the Hong Kong subsidiaries. And we have seen great performance for different indicators for the foreign banks in China. And secondly, we have seen great improvement of the service level. In the past 5 years, we have seen funding of more than 1.3 million provided by the banks. We have seen improvement for the inclusive loans. And we have seen more than ⁴ trillion yuan of investments that goes into science and technology. And insurance as the buffer for risk, we have seen a claim of more than 9 trillion. And third one is about the stable operations of the financial system. The major indicators of the finance are still very healthy. The non-performing loans for banks is around 1.47%. The profitability of insurance companies have greatly enhanced, and the provisions for risk and capital has exceeded more than 5 billion. And we have seen also the stabilization of our property market, and we have seen great solutions for the local debts. And the fourth one is the continuous consolidation of the IFC positioning of Hong Kong. Hong Kong has banking industries from more than 40 countries and regions. And we have seen great penetrations and coverage of insurance. And from the first 10 months of this year, the IPO scale in Hong Kong is ranked number 1. And at the same time, Hong Kong is now undertaking more than 75% of the offshore RMB settlement and payment business. And connectivity schemes, including the Shanghai, Shenzhen, Hong Kong Bond Connect, Wealth Management Connect, and other schemes have been greatly integrated into the national development. And we can see that the fourth plenary session of the 20th CPC meeting has already confirmed the 15th five-year plan for the country, which suggests that we need to build the country into a financial powerhouse, and we need to focus on science and green finance, inclusive finance, pension finance, digital finance, etc. We need to make sure that the financial institutions can focus on their specialty and complete the overall governance framework. It is also suggested that Hong Kong and Macau should play its role as an important connector of the world and the Chinese mainland. And Hong Kong's position as an international financial center, shipping center, trade centers should be further enhanced. And the country supports Hong Kong to build it into an international science and technology hub. All these targets and requirements have created new opportunities for Hong Kong. As we know, for many years, Hong Kong has been number 1 among the international financial centers. In the latest ranking, with Hong Kong's
There's crisis every other day. One of the most recent one being the port strikes in the US. What Maersk allowed us is visibility through data. So in the moment, even though our shipments were in the sea, we were able to pivot the routes in a way that there could be minimal disruption to our consumers.
इनको पुराने तरीकों से ऑर्डर करने दें। 1000+ brands, more than 2 lakh grocery items और लाइव ऑर्डर ट्रैकिंग के साथ आपका ऑर्डर फूड पैंडा संभाल लेगा।
Achievements in capital funding mechanism, business environment, financial talents, and other advantage has become Asia's number 1 and global number 3 financial center. And with the 15th five-year plan, Belt and Road Initiative, and also the Greater Bay Area's policies, the financial cooperations between the Chinese mainland and Hong Kong will embrace great opportunities and space. For our next step, we will continue to deepen our financial cooperation between Chinese mainland and Hong Kong, and to make sure that Hong Kong can be fully integrated into the national development, and to continue to enhance Hong Kong as an international financial center. First, we need to expand the opening of international finance. We need to benchmark with the international standards and explore in a greater scale and greater scope for the finance openness. And with CEPA framework, we respond actively the demands of the finance industries in Hong Kong and Macau, and continue to open up to the Chinese mainland. And we support the Hong Kong institutions and organizations to come to Chinese mainland to build up a vibrant cooperation and partnership. And we'll continue to deepen the interconnectivity with Hong Kong and the Chinese mainland. Hong Kong as the super connector will continue to play a very important role in terms of insurance. The Chinese insurance companies would be allowed to issue insurance-linked bonds in the Hong Kong markets. And we will also continue to provide more facilitated financial services in the Greater Bay Area. Hong Kong has great advantages in international trade, shipping, logistics, and finance services. There are many cooperation modes that we can explore in the Greater Bay Area. We support the banking and insurance institutes to go global, to help the Chinese companies to reach broader markets. Hong Kong has advantage in the finance, law, insurance, and other professional services. It is a very important support and platform for Chinese companies to go global. And thirdly, we need to focus on the 5 aspects for finance development. We need to strengthen technology, green, inclusive, digital, and pension finance corporations. Hong Kong has an advantage in science and technology, innovation, and IP protection. And it serves as a very good window for strengthening digital currency and electronic payment. We support the Hong Kong institutions to deeply participate in the science and finance practices and digital transformation in China. And we also promote the pension finance in Chinese mainland. And we should enable the green and low carbon transformation and provide China's example and experience to the world. We also participate into international finance governance and regulations actively. We need to effectively balance the risk and development, and we will further complete the cooperation mechanism and policy framework between the Chinese mainland and Hong Kong regulators to promote the high quality of the finance industry. We will actively respond to external risks and strengthen the communications in regulation, and financial safety and stability will be safely guarded. For the uncertainties, we will continue to focus on our own business, and with one country, 2 systems, Hong Kong will convert the national strategies into new impetus for its own development, while servicing the country's financial development. Hong Kong will continue to write its new chapter as a strong international financial center. I wish this summit every success. In closing, thank you. And I believe that the opening up of the SFC is of great interest to you. And now let's welcome Deputy Director Mr. Lee to share with us his remarks.
Audionic 11/11 biggest sale of the year, 80% off. तो फिर हो जाओ start and break your card.
An actuary is a risk analyst. They will predict the financial risks that a corporation or an individual will face in the future. They will predict that risk and think of ways to mitigate it.
Distinguished Mr. John Lee, Mr. 𝗟𝗶𝘃𝗲, Mr. Zhou Ji, Mr. Paul Chen, Mr. Eddie Yue, Mr. Yang Fengyu, distinguished guests, ladies and gentlemen, good morning. I'm very happy to be here to attend the 4th Global Financial Leader Investment Summit on behalf of CSRC. I would like to send my congratulations to the summit. We are now situated in an unprecedented time, and we are seeing a lot of uncertainties and turbulence for the global economic order and the financial system. This summit seemed tracking through shifting terrains is very timely. Mr. 𝗟𝗶𝘃𝗲 has already made a very important speech about how we can accurately master the trend of the financial industry globally. And he has also talked about the strategic deployment of financial measures and how to promote an elevated development of the capital market here in Hong Kong. We will continue to implement the important instructions. China's capital market was spawned amidst reforms and continued to open up to the world. And no matter what the international situation would be, China will continue to remain open for its capital market and will respond to the external uncertainties with a coordinated manner. In the 14th five-year plan period, the CSRC continued to implement the deployment and policies of the State Council and the central government, and it is always market-oriented and rule-based. For the market access and rules benchmarking, we have launched a series of very iconic open measures with great achievement. Since 5 years ago, we have opened up the market access. We have cancelled the bonds, securities, and futures foreign holding percentage. And we have applied equitable treatment for foreign institutions in this regard. And we support the investment of the foreign financial institutions coming to China to invest. And we have approved 13 foreign securities, futures, and fund companies with great license. And we have seen great growth for the numbers of foreign securities, bonds, futures companies. We have seen great connectivities for the market, and we have completed the regulatory mechanisms for companies to go listed in other countries. There are more than 269 countries going to another country to go public, and we continue to see the expansion of the connectivity scheme, and we have also provided great convenience for the foreign investors to invest in the Asian market. The holding value is now already reaching 3.4 trillion RMB. Foreign investors have become a great participator for the markets, and we have seen greater openness in the products. We have the mutual recognition of funds and the ETF mechanism. We support Hong Kong to launch the first A-share futures products, and this has catered to the needs of the investors in different risk appetite. And we continue to open up the new products for futures and stock options. And now 24 specific products have already allowed foreign investors to participate. And we are opening up our capital market, Hong Kong, with its expertise and advantage in institutions, capital and talents, has already become a very important bridge that connects Chinese mainland capital and the world. We are very happy to see that since this year, Hong Kong's capital market has already demonstrated very good upward trend for CACL, Hongwei, pharmaceutical, and other great enterprises has already gone global through Hong Kong. And competitiveness, influence of Hong Kong as an ISC has continued to be consolidated. This attractiveness continue to grow for foreign investors. And Hong Kong's prosperity means great prosperities for the country. And on the other hand, we have seen the national policies benefiting Hong Kong. Well, we continue to open up the mainland Chinese capital market. While we continue to develop in a synchronized manner, we can help Hong Kong to foster its position as an international financial market. At the same time, to Chinese economy and high-quality development of mainland enterprises, we are also injecting a lot of energy.
Say goodbye to Slack because chat's here and it's inside ClickUp. Everything you need.
The session has endorsed a number of recommendations, clarifying our next 5-year objective in terms of building the high-quality system. We have already set a very good foundation. We have made proposal in terms of constructing our nation into a strong financial power. We will continue to uphold the spirit of the plenary session. We will control risk and move towards high-quality development. We will deepen the capital market and also complete the mission to continuously open up our market and identify useful measures along the way. We will further enhance cross-boundary facilitation of investment and financing. Last week, actually, we have launched a working plan to optimize investors' system so that we can enhance the efficiency and expand the scope of investment from foreign investors and enrich investment options and provide facilitation and highly efficient measures to further support them, provide more predictability and also clarity to our investors. We'll continue our dialogue so as to expeditiously implement these measures. We will deepen our collaboration with the capital market in Hong Kong. We will enhance efficiency for IPO in Hong Kong. Renminbi stock transaction counters would be included into our framework. We will support the futures market in Hong Kong, enrich the management tools for offshore renminbi initiatives, and help Hong Kong to continuously foster its position as an international financial market. We will create healthy interactions. Thirdly, we will further enhance our regulatory capability and risk aversion capability. We will deepen cross-boundary legal protection and collaboration, including the Hong Kong MA. We will share more information, co-negotiation of policies to prevent risk from crossing the border. At the same time, under the Oslo framework, we will continuously promote the capital markets fair, just, and inclusive characteristics. Dear guests, dear friends, Chairman Xi has already pointed out, if you work with China, you are working with opportunities. If you trust China, you are believing in your future. Under the 14th Five-Year Plan, we have achieved a growth of 5.5%, and we have provided 35% of stability to the world economy. We have very good pillars of support for the Chinese economy. If you look at our Asia market, they have stabilized and rebounded. This year, major indexes have been improving. Total market cap exceeded 111 trillion RMB. And our two stock markets, the average daily transaction is about 2 trillion. We welcome more international institutions and long-term capital to come to China to establish your foothold so that we can develop and win together. I have a number of ideas that I would like to share. First of all, it's about investment value. Our policies and initiatives are being implemented so that our overall system continues to be optimized. Our internal tenacity has improved. In the first half, Asia companies' net profit and revenue have grown for the first 3 quarters. Our dividend payout in total reaches 2.1 trillion RMB. And the fluctuation has eased off. So we should be your preferred destination.
The world of logistics today really demands agility more than anything else. At Maersk, we've created a global network which doesn't only include ocean, air, or fulfillment solutions, but now also incorporate last mile services, ground freight, and trade and compliance consulting.
आज ब्रेकफास्ट में फिर कुछ स्पेशल
हर दिन कुछ स्पेशल क्यों नहीं
खालिस दूध से बनी पाकिस्तान नंबर 1 ब्रांडेड डेयरी क्रीम सिर्फ नेस्ले मिल्क पैक क्रीम बनाए मेरा हर ब्रेकफास्ट एक्स्ट्रा स्पेशल अब हर दिन खुशी से
From Nestle of investment. The Chinese economy is strong and it will provide continuously unprecedented investment opportunities to all of you. In terms of our journey on modernization, you should grasp such opportunities to share the premium of our development. In terms of being a contributor, the 14th Five-Year Plan already stipulated that we need to be more inclusive and we need to perform greater functions as a capital market. How do we move with the times, how do we deepen reform measures and innovation so that new businesses, new technologies, new enterprises can receive more inclusive services so as to better serve high-quality growth and development. That is indeed an important topic for all of us. We hope that international organizations can share your experience and wisdom and give us your valuable recommendations. Third, as the stabilizer of the market, stability and safety, a very important safeguard for a capital market. At the moment, the international financial market is becoming more fragile with a lot of uncertainty. Different economies are striving to strike that balance, but we continue to see complex challenges. International institutions, we hope that you will come to China to invest and run your business and continue to adhere to our laws and regulations, focus on long-term investment, do well your internal risk assessment and prevention, step up your communication with the regulator and government bodies so as to set up this risk prevention system that is well-rounded and comprehensive. I wish this summit a great success. Thank you. Thank you, Mr. Lee. Thank you so much for your comprehensive sharing. Your speeches are really forward-looking, so let's give them a big hand again. Thank you to all of you. Thank you for your sharing. Please stay on the stage for a group photo. Let's look forward at our official photographer. Please look at the media at the back, towards the left. Thank you very much. Thank you all again. Please be seated off stage.
Short break. Please remain seated while we set the stage for the next session. The Chief Executive, Mr. John Lee, Executive Deputy Director, Mr. 𝗟𝗶𝘃𝗲, and Minister Zhou Ji will now leave the venue due to other commitments. Thank you again, Mr. Lee, Mr. Xu, and Mr. Zhou for your time at the summit today.
At GoDaddy, we know your website is the center of your online business. Help protect it from online threats with website security. Every GoDaddy plan comes with an SSL certificate that'll protect your customers' sensitive data, along with daily malware scans and a firewall. all of which you can manage from one place. A protected site will also help your search ranking. Get peace of mind for your online business today with GoDaddy.
'25 has been an eventful year. We've witnessed some of the most remarkable shifts in global economies, trade, politics, and diplomacy in peacetime. Are these becoming the new normal? Let us hear from the speakers of our next panel. Please put our hands together to welcome our moderator, Arthur Yoon from the Hong Kong Monetary Authority. And joining him on stage, our panelists, 𝗟𝗶𝘃𝗲 from HSBC, Bill Ford from General Atlantic, and 𝗟𝗶𝘃𝗲 from UBS. Can we also have 𝗟𝗃𝗲𝗲 from UBS? Oh, sorry. Bill Ford from General Atlantic, please. Okay.
So we're waiting for one more panelist, Bill Ford. Bill, where are you? So you've heard the developments in China in the previous panel. This panel, we look at it from a slightly different perspective. We look at macro trends. Hopefully, the two panels together will lay the foundation for more in-depth discussions on topical issues for the rest of the morning in the other panels. So if I poll the audience for the major macro trends that really matters for the financial markets today, I think it would be fair for me to say that it come up with a list of the following issues. The first and foremost, I'm sure trade and related supply chain dynamics would come up first in the list. And then I can't use the term green anymore, I think. But it's fair for me to say that decarbonization and sustainability related dynamics would continue to be on the list. And then wealth management is seeing a lot of changes in dynamics as well, so that would also feature on the list. And I don't think that list would be complete without any discussions about AI-related investment recently. And finally, in my recent dialogue with fellow banking supervisors around the globe, the topic of deregulation and simplification keeps coming up. So I think that would be another topic that macro trends that we need to cover in this panel. We have 25 minutes, slightly more than 20 now. See how much grounds we can cover in those 5 areas. So let us talk about the trade and supply chain dynamics first. Let me turn to Bill. Bill, you served on the boards of ByteDance and also the National Committee on U.S.-China Relations. Can you just quickly share with us your take on the trade relations between China and the U.S., given the more recent developments?
Yes, thank you, Arthur, and thanks for having me here. I think we've reached a new and more stable equilibrium in the U.S.-China relationship. as evidenced by the meeting between President Xi and President Trump last week in APEC. And I think despite some of the noise on the surface related to tariffs and some of the exchanges back and forth on trade, I think below the waterline, there was actually a much more constructive engagement, as evidenced by Secretary Besson and some of the Chinese leaders in their 5 meetings during the year. And I think it set the stage for a very constructive meeting where, 2 major things were accomplished. One was, fortunately, there was a TikTok agreement, final agreement, and second, a pause in any trade actions for another year. And I think it sets the stage for a much more positive and I think stable relationship between U.S. and China in the next year. So I would say it's on a cyclical upswing, despite some longer-term challenges related to national security and competition and technology.
Yeah, thanks, Bill, for that very comforting remarks. Certainly, dynamics seems to be sort of, at least the temperature seems to be coming down a little bit recently, given the dialogues going on. You mentioned more stable equilibrium. I think equilibrium is one word, stable is another word. I do hope that stability would continue, but given what happened in the past 7 months in the trade fronts, stability seems to be a very scarce sort of commodity to go by. Should we be worried about the stability part of it?
Well, I think we've had a lot of volatility in the relationship going all the way back to the Trump's first term. And, really a lot of movement in policy on both sides. But I think there's a recognition that both countries will benefit by a more stable and more predictable environment. And I think that was my takeaway from last week's meeting and some of the build-up to it in sort of the lower-level meetings between Secretary Besson and everybody else.
Thanks, Bill, for that remarks. Let me turn to George. Supply chain. Supply chain uncertainties, definitely there's a very important sort of developments going on in the financial markets as well. Now, HSBC actually coined the terms Asia by Asia, I think, right? So can you share with us your take on that in terms of supply chain dynamics changes?
Thank you, Arthur, and thank you, Eddie, for hosting us, bringing us together today for the next few days. Few observations I'd like to share on trade and supply chains. 5 observations. The first one is just echoing what Bill has said. On the 2nd of April this year, we felt that hell was breaking loose, and by the 31st of October, things seem to have subsided and stabilized, and we acknowledge that there remain some challenges, but minor compared to what we were bracing for back in April. So this is the first observation. It's a relatively good news story where we stand today. The second observation is that trade has been resilient. Despite the last few quarters' uncertainty, trade has been resilient, and so we observe that 72% of global trade remains on WTO terms. This is down from 80%, but we're still talking high 70s, in the 70s. Also, trade volume globally have increased by 2.9%. Again, this is down from 3.5% in 24, but we're still talking growth in global trade. The third observation is that trade has been reconfiguring. And this is exactly where the phrase Asia buys Asia comes in. This is one of the major reconfiguration of global trade, where we've seen effectively Asia starting to be much more engaged with itself through various intra-regional corridors, but also between Asia and the Middle East and other corridors around the world, somewhat taking, if you want, taking more prominence compared to what historically was the summary of global trade being China produces and then sells to the US consumer. That's definitely become much more sophisticated and nuanced today with Asia buying Asia. We believe Asia buys Asia brings about 1.8% additional GDP to Asia. So this is that much more wealth that will be created because of the Asia buys Asia. But this reconfiguration is also not only about the geographic reconfiguration, is also the the content reconfiguration, and where we see now technology and AI goods contribute to about half of the growth in global trade. And we're seeing, of course, outside the trade in goods, trade in services grow at twice.
My work is easy because I use ClickUp. Here's how I get perfect notes.
So there are definitely reconfigurations across geographies, content, and the substance that's behind it. The fourth observation, Arthur, I'd like to share is that trade is not only about trade. Trade has become a major driver of foreign direct investment and a major driver for employment. And we've seen that very clearly in ASEAN, with Chinese foreign direct investment to build manufacturing capabilities, be it autos in Thailand, be it electronics in Malaysia, be it logistics in Singapore, etc., etc. Vietnam, Indonesia have been also big beneficiaries, but also places like India and Mexico have been big beneficiaries of these FDI flows. So they bring with them hard currency, they bring with them employment, they bring with them wealth, they bring with them export capabilities. And they partly benefited from low wages in many of these countries, compared now, for instance, to China. But also, the potential of this growth is massive, because when you look at the FDIs from within Asia, specifically China, we remain at substantial, or multiples lower than the FDIs of some of the more mature economies, such as the US, Germany, the UK, Japan, Korea. So there is massive potential for more.
These are the hands that will cast votes. These are the hands that will knock on doors. These are the hands that will call your name.
Will have a different role in global trade. The first thing is the US was the consumer of last resort. Anything manufactured on this planet would find buyers in the US if they couldn't find buyers anywhere else. And that probably will not be the case anymore. Or if it is the case, it will come at a price. And that's a base tariff to access the US consumer. And we just need to be factoring this in the future as part of the US being more self-reliant than it has been historically.
Yeah, thanks, George, for those trends. All you've mentioned actually creates a lot of opportunities for the region, the APAC region as a whole. But apart from opportunities, are there any risks that we need to watch out for in those kind of landscape?
So there definitely creates lots of opportunity. I just take the opportunity to say that we have, on the 9th of October, announced an offer to invest more than $100 billion Hong Kong dollars in Hong Kong, with our offer to take private Hang Seng Bank. So hopefully that talks by itself about the conviction we have in the opportunity we see in the space. But if I talk about the risks, there are a number of risks. Certainly, a big risk is the technology disruption. Adopting it is an opportunity. Missing out on it is going to be a major risk. And it still comes with some of its challenges. Adopting blockchain is a major opportunity. We already rolled out tokenized deposits for our customers in Hong Kong and a number of other jurisdictions. We're participating to the e-Hong Kong dollar. We're participating to Project Ensemble for the interoperability of blockchain. All these opportunities are real, but there's still a lot that's happening on the blockchain away from regulated financial services in some of these unregulated stablecoin issuers. And that's a threat, because it's an activity we cannot engage in being regulated and living by different standards than some of these issuers. Hong Kong is addressing that through a recent regulation on stablecoins, but obviously it's still a major global challenge. And then the second, I'll mention the second opportunity and challenge, of course, is generative AI and large language models. Opportunity in how we can improve customer experience, productivity, coding, efficiencies, how we can improve fraud detection, and I can go on, simplification of organizations, etc., all of which we're dipping into. But it is a challenge, because obviously the expertise remains somewhat limited, the compute power remains somewhat challenged, and the use cases and the benefits benefits cases aren't yet proven. We're still trying to prove them.
Thanks, George, for that. Let me put that a question related to what you're saying to put that questions to Bill. So your firm has been investing in China and Asia Pacific emerging markets in particular. What do you see are the more compelling investment opportunities now in this part of the world? And related to that, this part of the world is still soldiering on in terms of sustainability-related investments. GA has been leaning into climate and sustainable infrastructure with your Beyond Net Zero and Actis. Do you still see that as a major sort of trend? And given the current global environment in some of the major markets, are you seeing sort of backpedaling?
Well, there's sort of two questions in there. One related to where are the investment opportunities here in Asia, and the second related to energy transition and climate. And I'd start with the first and just say I think that China still represents an incredible opportunity for new investment related to innovation, entrepreneurship. And there's a new cycle of entrepreneurship, I think, happening in areas like life sciences, med tech, some in energy transition, consumer electronics, and just having.
बच्चे तो कोई भी ग्लास उठा सकते हैं क्योंकि दोनों दिखने में एक जैसे हैं और ये नहीं जानते पानी से जुड़ा है इनका हेल्थी फ्यूचर। पर आप तो जानते हैं ना, कंफ्यूज्ड? हेल्थी फ्यूचर जुड़ा है इनकी हेल्थी हाइड्रेशन से, जो देता है नेस्ले प्योर लाइफ, जो स्विस हेरिटेज को बरकरार रखते हुए पिछले 25 साल से ज्यादा अरसे से आप और आपकी फैमिली को हाई क्वालिटी हेल्दी हाइड्रेशन फराहम कर रहा है। हमारी आज की चॉइसेस से ही बनता है इनका हेल्थी फ्यूचर, और हेल्थी फ्यूचर से कीमती कुछ नहीं। फ्रॉम नेस्ले।
Spent a week in mainland China. I was amazed just at how a new generation of entrepreneurs are carrying forward. So I think it's very hard to not, if you're a growth investor or someone who's focused on innovation, it's hard not to put China at the top of the list in terms of opportunity set. I think India is also having its digital decade. If you look at some of the facts over the last 5 to 10 years in India, I mean, you have Jio, the mobile internet provider, over 500 million users. Their Alipay equivalent, a company called PhonePe, has 600 million daily users, and the payment system has been largely automated in India. So I think India is having a really significant moment in terms of its, innovation and entrepreneurship that's happening. So I think those have to be at the top of the list. And I think, despite the fact that the pendulum swings in terms of, the attractiveness of sustainability, energy transition, climate change, I think the reality is we're in for an energy transition that's going to take place over 25 years, and we're going to need a lot of capital to be invested to facilitate the energy transition, and we're going to need a lot of new technologies. And that's been our focus, is what are the technologies that will facilitate energy transition, sustainability, as the demand for power around the world is, if anything, it's inflecting up significantly because of AI. So I think the opportunities for that theme, the energy transition theme, are alive and well, and will be for a while.
Yeah. Thanks. Just a quick remark. It's okay to talk about green in Hong Kong. You can still use that word. Okay. Let me turn to comp. Switzerland. I really want to talk to you about Switzerland. Switzerland has always benefited from periods of uncertainty because Switzerland, because of its neutrality, because of its financial stability all along, it always benefits from these kind of uncertain environment. How do you see Switzerland fitting into the current landscape?
Well, I think Switzerland is not quite as big a country as we realize. It's 9 million people. It's the center of global wealth management, or was rapidly being approached by Hong Kong and Singapore. It has always been a neutral country and has benefited from that. In many ways, it's cost it, because the Swiss franc as an overspill currency, as a reserve, gets very expensive. But Switzerland is facing a crossroads here, because it's facing some major challenges. For the first time, it's facing a threat in global wealth management from centers like Hong Kong and Singapore. Secondly, its pharmaceutical industry is being hollowed out as a result of the tariff talks and so on, and relocation and manufacturing. And thirdly, it's having a bit of an identity crisis about what its role is in world banking. I'll talk about that separately. So I think Switzerland is losing some of that luster as other centers are now competing with it for capital.
So, do you see that as a competitive relations, or are there any other way of putting these markets together to collaborate? Like Hong Kong, Singapore, you mentioned, that quickly catching up?
Well, the world is an increasingly linked place from a regulatory point of view, and we have two major disconnects in global regulation. One you've heard me talk about before, which is the lack of regulation or effective regulation in the shadow banking system. I'm not trying to upset anybody in this room like I did a few years ago. And the second one is actually, if you look at the regulated banking industry, you've now seen a different speed in terms of, let's call it simplification, whether it's the US, which is leading the way, quite rightly, I think, because the US has decided that capital is yesterday's problem, and what you need to do is, having settled the issue of capital for banks, you need to have effective regulation to let economies grow, and slowly the UK is following. The ECB doesn't quite know what to do yet, and Switzerland is going the other way. So, you know, so you've got these two big trends in global regulation, one where there's lack of effective regulation, and the other where there's a disparate speed in regulation.
Interesting that you mentioned regulation repeatedly, because one of the areas that we want to talk about is deregulation, because increasingly I've heard that word being mumbled in the international community, particularly amongst the major markets. If I want you to pick one area of regulation that you think can be simplified or deregulated, what would you pick?
Well, I think the US is doing it. They're talking about deregulation.
Your email is your first online impression. Make it count. With GoDaddy Email, you get a professional address that matches your domain. It builds trust, boosts credibility, and helps grow your brand. Setup is quick, and your inbox is protected with built-in security. And if you ever need help, we're just a call away. Start building your brand, one email at a time.
Can in fact remake the politics of the place that you call home. And I want to thank every person that's here. Because though it is tempting in electoral politics to ascribe an achievement to an individual, it is actually of a collective.
खुद ही तो महंगाई लगे रहते हो, सोचा थोड़ी बचत कर ले।
मतलब दो लोग एक ही कप में पिएंगे?
नहीं, आप देखेंगे।
ओह, मुझे पता था।
क्या करूं? इससे बनते ही दो कप हैं।
समझते हैं एक दूसरे को, इसीलिए बने हैं एक दूसरे के लिए।
From Nestle.
In fact, what it is simplification and focus on what needs to be done. Let's take an example. Everybody says that Silicon Valley Bank was a failure of regulation. It was a failure of regulation because of incomplete application of the rules that were in place. There already were rules, but the regulators did not apply those rules properly. They got too caught up on orthodoxy, on rule application itself. When you have a CCAR submission that's 125,000 pages, who reads it? When you have 450 regulators sitting in a bank every day, what are they doing? I think this is what the current administration in the US is trying to do. It's trying to assess what is the risk, what are we trying to do? And in fact now, if you look at what's happening in the UK with respect, and certainly with the SSM in Europe, what we've got is total form over substance. And I think this is something that people are now trying to change.
It's interesting you mentioned CCA. I trust that means that you think FINMA is doing all the right things. Sorry, you don't have to answer the questions.
Thank you, Arthur.
George, your pick of one area for simplification and deregulation?
So I'll probably pick two, if you allow me, Arthur. The first one is prudential. We've all been told Basel III is the solution of unification of prudential regulation across the planet. Basel III has gone in all sorts of different directions. Actually, even the name, is it Basel III, 3.1, 3.5, Basel IV, Basel III Endgame, and I can go on.
3.
That's the Hong Kong. But the substantive problem is still there. We have very different interpretations of Basel III, some of it known, some of it unknown, but definitely more on the diversion track. And that's not helpful. That's not helpful because of financial markets are inherently international, and if you're not playing by the same rules and the same standards, there is going to be risks of concentrations in areas of activities that is going to become unhealthy. The second area I want to call out is regulation of the fully unregulated space of stablecoin issuers. Now, arguably, some of the non-bank financial institutions have lighter regulation than banks, but at least we're playing by the same standards of financial crime, the same standard of regulation, and we can argue about how light or not light. But there are segments of the world of finance that are totally unregulated. They're called DeFi, or they used to be called DeFi, and inherently go against what central banks stand for, which is centralization of finance. So there is a real risk that that this is a totally segregated space where businesses are being done, where consumers are putting money, where the prudential rules are at best a list of suggestions, and where financial crime rules are abhorred because they're anonymous payment is really the name of the game, and we know what anonymous payment can lead to in terms of financial crime risks. And that is a real risk that we face, that consumers someday may face challenges, and no one here from the regulated industries is supposedly here to support them.
Thank you. Turning back to you, Kom, just very quickly, this topic about deregulation or simplification, it was actually founded on the basis that we're entering an era of slower growth, and therefore policymakers do need to strike the right balance between stability, financial stability, and growth and development. You think that balance could easily be struck? And is that an impossible sort of dual goal?
Look, I think regulators lost control because in their desire to over-regulate the banking system, they chased a huge amount of product out of the banking system into the shadow banking sector, which is not regulated on the same basis. And if you look at what Bessent is doing in the States, it is trying to kickstart the economy. It's trying to feed lubricant into the economy to get banks to lend more because they can control that. But no, I don't think they do have control. For instance, let's take, and I hope I upset nobody in this room now, but let's take the insurance business, right? Increasingly in insurance business, particularly in the States, it's regulated on a state-by-state basis, not a national basis. We're beginning to see huge rating agency arbitrage in the insurance business. Remember in 2007, subprime was all about rating agency arbitrage. What you're seeing now is a massive growth in small rating agencies ticking the box for compliance of investment. And these things actually, whereas a few years ago I got into trouble with.
Say goodbye to Slack because chat's here and it's inside ClickUp. Everything you need in chat is here, like your DMs and even your channels. But there's a ton more you can do. Chat conversations can lead to so many new ideas, and now you can turn those ideas into action with just a couple of clicks. Any chat message can be turned into a task like magic. Simply select the message you want to turn into a task and click Create Task. You can create the task details manually, or you can create with AI and have the task name, details, and assignees created automatically based off context from the conversation, just like magic. ClickUp Chat is available now. Check it out and thank me later.
Who have shown their unwillingness to compromise on their own morals and their own values as the way in which they fight back. And too often what we found...
Booking an apartment with good Wi-Fi is great. Connecting with the locals is even better. Booking.com, booking.yeah.
Still, the Trump administration was cutting funding from our schools. Still, the Trump administration was taking $80 million.
My good friend John and Mark for mentioning private credit. Let's not talk about that anymore. If we look at that, to me was never systemic. That was fiduciary. But if we look at the insurance business, to me there is a looming systemic risk coming through, and it's because of lack of effective regulation.
Thanks. Finally, we have a little bit of time left. Can we turn to AI? And for that one, I would turn to George and Bill. The AI-related investments. First of all, to George. This is really a mega trend right now. I checked the data in the past 2 months alone. Something like 20 billion of financing have been poured into constructing data centers across US and Europe for AI purposes. What do you take of this trend?
So Arthur, this is a tricky question because first the numbers actually are staggeringly higher. Well, at least the commitments are staggeringly higher. We're talking multiple hundreds of billions of dollars, if not into the $1 trillion of investment data centers. It's tricky because on the one hand, we need the compute. And for all users, be it personal or corporate, we can see that the compute becomes sometimes a challenge and the availability and the speed of reaction is not there. But on the other hand, the revenue profiles can't necessarily match can't necessarily justify the spend. Consumers aren't ready to pay for it or very low, and businesses are ready to pay for it, but they're going to be cautious because the benefits cases will not materialize in productivity in a year or two. These are like 5-year trends, and therefore the ramp up means that we will start seeing real revenue benefits and real readiness to pay for it probably later than than the expectations of of investments are.
Then turn to the investor perspective, Bill.
Yeah, it's been first of all, I think it's hard to overstate the impact that AI is going to have over the long term on the overall global economy, the tech sector, et cetera. And I think that's why you've seen somewhere between 750 billion and $1 trillion invested already. I mean, the estimates are another 500 billion next year. And I think this is because people recognize the long-term impact that's going to have. But like so many new technologies, there is going to be misallocation of capital destruction, overvaluation, irrational exuberance. But I do think long-term you're going to create a whole new set of industries and applications, and there will be a productivity payoff. But that's a 10, 20-year play. But the problem is you need to make the investments now. Unlike the internet, this cycle is very capital intensive, and you need to sort of pay up front for the opportunity that's going to come down the road.
And as George mentioned, the return profile is very different from the internet age.
It's hard to pick winners and losers right now, and it's hard to know the exact nature of the return. You're really betting on this being a broad-based technology, more like railroads or electricity, that had profound impacts over time, but and reshape the economy. But we're very hard to predict exactly how in the first few years.
Yeah. Okay, thank you very much. We have used up all the times allocated to us. Let's put our hands together for the generous sharing by the panelists. Thank you very much.
Thank you very much, Arthur, and our speakers. May I now invite you to take a photo at the front of the stage, please. Please remain on stage for a group photo. Please look to our official camera in the front. And now to the back, left black. Thank you very much, our speakers. You may now be seated. We've just explored the macro changes shaping our world. But what do they mean for the markets? In this next session, our panelists will share with us some of the most exciting opportunities on the horizon, the critical risks to watch out for, and the key trends set to define the time ahead. Please give a warm welcome to our moderator, Julia Leung, from the Securities and Futures Commission, and our panelists, Mike Gitlin from Capital Group, Ted Pick from Morgan Stanley, and David Solomon from Goldman Sachs. Julia, over to you. Thank you.
A very warm
इनको पुराने तरीकों से ऑर्डर करने दें। 1000+ brands, more than 2 lakh grocery items और लाइव ऑर्डर ट्रैकिंग के साथ आपका ऑर्डर फूड पैंडा संभाल लेगा।
Welcome to our panel on markets, and I'm glad that I'm joined by 3 CEOs who need no introduction. I'm Mike, Ted, and David. Just now, Arthur's panel on macro economics trends set a perfect backdrop to what we are discussing. To borrow the summit's theme of tracking and shifting terrains, the terrains have indeed shifted quite a bit in the last year since we last met here. Our macro panel speakers have just spoke of trade tensions, refiguration of supply chain, the AI and the technology, the money that's been plowed into technology, and of course the regulatory landscape, which are moving in different speeds and moving in different directions. Against this backdrop, tracking is undoubtedly difficult, given the low visibility of what comes next. But when it comes to market, which is the theme of this panel, it's almost paradoxical that these uncertainties have not dampened the party spirit. US equities are setting record highs, driven by AI, deregulation, and rate cuts. So are many of Asia's equities market. Japan's Nikkei and Korea's KOSPI has hit new highs. Shanghai Composite is in the highest in a decade, helped by easing US-China sanctions and softening of US dollar and growing diversification. Hedges and alternatives are also booming. Gold, silver, Bitcoin prices have been up sharply, so are private markets and structured products. So is it risk on or risk off, or it's just formal? Surely alarm bells have set off. Jay Powers of US Fed sounded caution on the US stocks valuation. Andrew Bailey of Bank of England was concerned about the rapid growth of structured products, and IMF warned of the potential for a sharp market correction. To borrow an English idiom, which is often used in Chinese in exactly the same term, some would say the risk-reward profile right now is like pulling chestnuts out of the fire. So would the proverbial cat's paws be burned? So that's why, gentlemen, here's my first question for your quick take. Is all this sustainable going into 2026? I'll start with Mike.
Well, thank you, and I appreciate being here. Is it all sustainable going into 26? We tend to think of 2036 more than 2026, but if you look forward, what are some of the things that are sustainable. AI deployment and diffusion, adoption, productivity will continue to get better. It will take a long time, but it will continue to get better. Diversification into non-dollar assets. We continue to see demand for non-dollar assets around the world. Dispersion in terms of corporate opportunities and company opportunities around the world for investment. We talked a little bit about deregulation. There's a positive growth impulse to that, and I think the economies, and Colm talked about this, and I always love presenting after Colm. It makes it so much easier, so thank you. If you look at the deregulation, I think that's a positive growth impulse. And last, earnings. Earnings are strong, and that's super important. What's a little more challenging are valuations. I think everybody in this room, if we looked at a pendulum or a scale and said we had cheap, fair, and full value, and you had a plot somewhere on there, I think the majority of people in the room would say we're somewhere between fair and full. But I don't think a lot of people would say we're between cheap and fair. So on a valuation perspective, that's challenging. And I think if you look at the credit markets as well, if you look at 30 years of data, we're in the richest decile of credit spreads. So stock markets aren't cheap, credit's not cheap, and there's speculation in both precious metals and also cryptocurrency. So I think on a near-term valuation side, there's some challenges, but there's some long-term sustainability in some of the themes.
Ted.
Yeah, I agree with everything Gitz just said. We've come a long way. There's still policy error risk. There's still geopolitical uncertainty. But you think about where we were a year ago sitting on this stage, new administration coming in and talking about re-architecting industrial policy and addressing these enormous fiscal and trade imbalances. And look at what's happened. In April, we had the height of the headwinds when we had DOGE and immigration and the bill being put through, and tariffs, of course, hold them up. So we come to today, and yes, markets seem expensive, as Mike said, but the reality is systematic risk is probably narrowed. So if we were sitting here thinking last year about whether risk-taking in equities was itself problematic, now we're talking about valuation itself, which gets me to the same place.
तो 10 नवंबर रात 8 बजे से शॉप करो दराज 11-11 से द बिग बॉस ऑफ 11-11.
Looking into 2026, which is earnings. I think to the extent that companies are able to demonstrate on the back of pretty benign consumer and corporate data that they can inure the needed spend on AI and they can actually continue to build comparative advantage and produce good earnings, they're going to outperform. We're going to see that dispersion. Those companies that can't, they will underperform. But the new issue market is active around the world. Investors want to take risks. So I'd say the overall environment feels pretty good going forward. We should also welcome the possibility that there would be drawdowns, 10 to 15% drawdowns that are not driven by some sort of macro cliff effect, just the reality that, for example, metals have really run. I think that's a healthy development, and what we'll be looking to see in 26 is whether the market, in fact, broadens and we see that kind of dispersion.
So, David, would you agree with them or not?
Well, going third is always easier because the two smart gentlemen on the stage have said most of what I would say on those topics. I mean, things I'd add just for perspective. In 1996, Alan Greenspan started talking about irrational exuberance in markets, and the Nasdaq was 1,300, and it peaked 3.5 years later at over 5,000. So when you have these cycles, things can run for a period of time. But there are things that will change sentiment and will create drawdowns or change the perspective on the growth trajectory, and none of us are smart enough to see them until they actually occur. And it won't be any different, this time at some point. Technology multiples are full. I'd say technology multiples are kind of 80th percentile in a historical context. But when you look at the broad market, there are lots of things where the multiples aren't as full, especially given earnings growth and kind of the momentum in economies. Most governments are running most developed economies are running very, very aggressive fiscal plays, and that, underlies economic strength and forward momentum. And so I think it's a pretty constructive environment. Give you lots of things that could go wrong, but at the moment, those don't seem likely in the short-term distribution of outcomes.
Well, David, you actually, my next set of questions is about strategic asset allocation, which will be directed individually to you. So I'll start with David. You actually mentioned drawdown and Ted as well. Not recently, then you have actually say that you expect and predict a drawdown in the next 12 to 24 months. That's a very long span. What are the factors? Maybe you can elaborate on the factors that trigger that drawdown. And you guys have avoided using correction or crash or something, but drawdown. So explain what is your advice giving your clients to prepare for that drawdown?
Our advice generally, the firm's advice for a long period of time has been to stay invested and look at your portfolio allocation, stay invested, and that advice has served people well. None of us are market timers. It's a little bit what Mike said. He's looking at 2036, not 2026. But if you believe in growth in the world, you have a portfolio allocation as a global capital allocator, and generally speaking, a 10 to 15% drawdown, which, by the way, happens often through, even positive market cycles, is not something that changes your fundamental, structural belief as to how you want to allocate capital. So, when I made that comment at Italian Tech Week about a month ago. I said, and I don't remember how the question was framed, but the question was framed in a way where I said, of course, it is likely there'll be, a 10 to 20% drawdown in equity markets sometime in the next 12 to 24 months. And I'd say there are very few people in this room that don't think that that's a meaningful possibility. It doesn't mean that the general direction of capital flows, investment, portfolio allocations changing. It just means things run and then they pull back so people can reassess.
All right, it's more like while the music goes on, then let's continue to dance.
No, I didn't say that.
Right. Ted, as a strategy to diversify, investors have increased allocation to alternative investments. Like Morgan Stanley has suggested between 15 to 20% allocation to alternatives. So which alternative assets in particular, and private market seems to present a case of high risk, high reward, as seen in First Brand's bankruptcy. So how are you going to take advantage of these opportunities while mitigating the risk, or, so to say, avoid the cockroaches that your peers said?
नीडो स्कूल एज न्यूट्रिशन में मौजूद इजाफी न्यूट्रिएंट्स इसकी ग्रोथ, लर्निंग और इम्यूनिटी को सपोर्ट करें।
Well, diversification, risk management, they all matter. Pricing, liquidity. The context here is that the private assets market has tripled to 15 trillion over the last decade. So there's been the real institutional branding of the product, and now it's come of age. Over the last 12 to 18 months, we've now begun to see, through deregulation and technology innovation, the democratization of those private assets for retail. And that is exciting, because the retail investor wants to have the opportunity to own a SpaceX, for example. In the years before it goes public, private companies stay private for 14 years instead of 5. So some of that alpha is interesting to get to high net worth. If you look at our own allocation to private assets, we have about 5 trillion of non-self-directed wealth management assets in the U.S., and about 250 of that 5 trillion is in private assets across private equity, private credit, real estate infrastructure. That's about a 5% weighting, right? 250 over 5 trillion. And I would think over time, over the long span of time, that number could work its way towards 10%, but diversification will be important. And for us, we're open architecture. The $250 billion that we have is over 260 managers. We have product from these gentlemen's shops. We also have evergreen products where you can, on single ticket, a product we call PMAX, you can have a single ticket that gives you diversified coverage and investment to a broad array of strategies, so you are protected from the single CUSIP or single company experience. The other piece of this, of course, is the ability to trade those private assets, and there too, I think that's going to be an exciting development. There are products and companies like EquityZen that will be able to trade these private assets on a single name basis before they go public. That's interesting for those private companies as they look to grow into fees option plans, but it's also interesting for investors who want to be able to allocate not just funds across these strategies, but single companies too.
So diversification is still, diversifying from the public market is still part of the theme going forward.
Yeah, I think the theme is important, and importantly, when you think about some of the developments that folks on this stage are looking at, where they can have strategies that incorporate some of the best of public and private investing in a single product, that could be interesting. But diversifying amongst the private asset class and best of breed and having hygiene around diligence, really knowing where those asset managers have excellence is important, and then obviously layering into that over the long span of time. And then importantly too, to be considering what your real liquidity preference is at the client level. And that's an education for the financial advisor, knowing their clients and what kind of liquidity windows they actually have, both for investing and then also for wealth transfer, tax optimization, all of that. The technology that is coming to age is pretty exciting around the ability to actually do that in an effective way at the individual investor level.
I certainly agree. We in Hong Kong are looking at hybrids where on the retailization of private funds, then we are more like hybrids as a starting point for education. Let me turn to Mike, fixed income. So in this highly uncertain political environment and with fiscal debt, which our previous panel talked about being in a very high level for development markets, some would say that they would avoid U.S. Treasury. The fiscal debt situation has worsened, but none of you actually highlight it as an area for concern. But because everyone is talking about 2035, you started it. So, but I think corporate credits still, even though they're still fairly tight. So what kind of investor portfolio mix would you look at? Will there be a change in maturities that one should look into going into the near term, not 35, please?
Yeah. Well, if you look at fixed income, one of the things you do when spreads are tight is you go up in credit quality. So we're seeing a lot of interest in high yield from going from triple C's up to single B's and double B's, with investment grade going from triple B's up to single A and double A. Just go up in credit quality. The diversification benefits of fixed income are real. 2022 is an anomaly. It's very rare you have zero interest rate periods where rates go up 500 basis points very quickly. So those diversification benefits are real. If you look over the last 30 years in the public markets in a 60-40 portfolio, and the 60-40 portfolio's death is greatly exaggerated. If you look at the returns over that 30-year period, you've annualized 9% returns. Super good.
It is such a pleasure to be here.
From Nestle.
नेस्ले बुनियाद आयरन प्लस जो है 3 गुना ज्यादा मौसम.
Public market, transparent, liquid, relatively inexpensive, so benefits from those diversification. And then I think if you look at the macro environment, monetary policy is supportive. So if we look back 3 years and you're looking at returns in the fixed income market, corporate, core, high yield, emerging market debt, your annualized returns in these asset classes over the last 3 years is anywhere between 5 and 11%. So if you have 7% capital market assumptions, you're getting a long way there in your fixed income total returns. And your starting point in yields today is a pretty good indicator of your 5-year forward-looking return. So if the risk-free rate is still relatively high, fixed income still constructive. It doesn't mean spreads aren't tight. It just means all-in yields are relatively high, and if company earnings, like Ted mentioned, remain strong, it's still a constructive environment.
Thank you. My next set of questions is about continuing on the theme of asset diversification, but we'll focus on geographical regions, and particularly China and rest of Asia. I'll start with David again. Goldman Sachs has been very active in China, and I just learned that you're flying up to Beijing after this this morning's session. So since this deep-seek moment, people are taking a different view on China, and given what's happened last week with the, what do you call, truce or trade pact between US and China, how are sentiments changing, and what would you like, and what would you see in the next few years?
I'll make a couple of comments around that. I mean, you know, sentiment with respect to Chinese equities certainly had a lot of room to change. If you go back to a year ago, you know, after what happened in 2020 and 2021 and 2022, kind of six trillion was wiped out. And so you've seen year over year since we were last year about an 80% move in Chinese equities, and that kind of makes up about half of what was lost during that, you know, during that period. And I think it's reflective of whether it's the deep-seek moment or just a more normalized kind of long-term view, and also just the fact that on a global basis, with valuations moving up, you know, a lot of these Chinese equities look very, very attractive. China is one of the largest, most important economies in the world. Global capital allocators will continue to be interested in China in almost any environment. You know, I think what you've seen over the course of the last year is a little bit, after a shift away, a little bit of a shift back from global capital allocators. And, you know, my guess is that'll continue with this a little bit greater stability over the course of the next year versus what we've seen over the last 12 months.
I moved to Ted for the rest of Asia. You've seen actually the regional markets are actually growing very rapidly as well. That includes India, Japan, and Southeast Asia. So the MSCI Asia Pacific Index are up 20% this year. So we remain positive. Morgan Stanley remain positive on Asia in this region. So which are the markets which really excites you, and which are the markets which are more developed markets or more EM markets?
Well, I would echo David's comments. Hong Kong, China is where it begins and ends. The developments, if you believe in a market where investors will reward great companies and where dispersion matters, AI, robotics, EV, biotech, you have not just national champions, but global winners that are listing in Hong Kong, raising capital, and effectively establishing themselves as world's top 2, 3, 4, 500 companies immediately. So really, you start here. But as you look to in Japan, and you start thinking about not just diversification across asset classes, but diversification across geographies, it's hard not to be excited about Hong Kong, China, Japan, and India. 3 vastly different narratives, but all part of a global Asia story. In Japan, you see the reawakening of investor interest and corporate governance, and there is a ton of corporate activity that is underway and will continue. And then you have in Japan the reality of demography and the very slow but inexorable move of yen plus real estate is a savings portfolio into something that looks like a traditional invested portfolio, and that's something we're very excited about. And then India has enormous infrastructure-led runway, will be one of the world's most deeply held markets once we see the kind of deregulation that we would expect over the next 5, 10, 15 years. So if you think about the next 5 years and we talk about the need to diversify as between risk and non-risk assets and between public and private assets, it really does matter now to have that geographic footprint in all 3 major locations. Very different narratives, but all should generate alpha and positive risk-adjusted returns over the next 3, 5, 10, 20 years.
So, Mike, a year ago,
Audionic 11/11 biggest sale of the year, 80% off. तो फिर हो जाओ start and break your card.
Booking an apartment with good Wi-Fi is great. Connecting with the locals is even better. Booking.com, booking.yeah.
person that introduces them to this fight. And that is why more important than me is you. You are the people who are bringing this fight to the door.
or even before then, we're talking about the growing power of passives, and passives ETFs been like dominated. New money is going into passive. But now it seems that it's moving to active and active ETFs again. Maybe you explain a little bit about that trend change and where would it lead to and how should Asian investors benefit from it?
Yeah, I think what's starting in the U.S. is expanding globally. If you look at ETFs, it's an investment vehicle. For 30 years, we let the vehicle be described as passive because there weren't active alternatives. Now that there are active alternatives, the adoption rate is much faster than any of us would have imagined. I'll just give you a sense for us. We launched active ETFs in the U.S. 3 years ago. We reached $100 billion of assets this week. And the flow rate is about $1 billion per week. So the interest in getting those active outperformance in the ETF vehicle that's so well desired, again in the US for mainly tax reasons as well, but globally the vehicle adoption's growing. I think what you'll see over time is that installed base, so back to the US ETF market, 90% still passive, 10% active. The flow rate is about 35 to 40% into active. So over time, 90-10 will be 80-20, 70-30, et cetera, just for the opportunity to be able to gain the intellectual capital in a different vehicle other than a mutual fund or a separately managed account or a collective investment trust. It's just a vehicle of choice mentality, and the adoption rate tends to be high when you offer the vehicle that consumers want.
We have enough time for one more question for all three, a quick response. We've been talking about the trillions or hundreds of billions of US dollar plowed into AI, but we're not seeing, and the return will be spread out maybe 10 years, 2035. So, but in between, the investors might be, as the
I will always speak to every New Yorker who calls the city home, and while I'm looking to speak to Donald Trump,
next 2 years, not 10 years. And also, where is the biggest crack? That is Mike first, and then go all the way.
When you look at AI in general, I think of it on a continuum, and Gen AI in terms of augmentation and making people more efficient. You go out to agentic AI, robotic AI, quantum computing. The world is pricing AI as if it's further along that continuum than it really is in terms of actual effectiveness today. So I don't think there's a huge debate in that. Everyone uses the term overestimating the impact in the near term, underestimating the long term. While I believe that, the valuations today would suggest there's a lot built in to future expectations.
Ted?
Yeah, I agree with that. There'll be some capital misallocation, but it's here, and it will transform itself from something that is an efficiency tool to something that is intrinsically an effectiveness tool, and it's something where the genie is not going to be put back in the bottle. And as such, will actually, at the risk of crowding out investment in the short term, be something that could power global growth for a long time.
David, you have the last word.
I agree with what my colleague said. It's a journey. You know, there's a lot of focus right now on data centers and chips and compute, and some very smart people I talk to are focused on a lot of value being created in applications and the application layer. But whenever there's excitement about a new technology, and this is real, you know, people believe the opportunity, and generally speaking, things run ahead of the speed at which it ramps up. My guess is we'll see some of that here. But in the long run, these are really, you know, interesting opportunities, and a lot of capital will be winners and losers, just as there always has been. And, you know, we'll experience that in the coming years.
Thank you. That remains for me to thank our speakers and in this very agreeable panel, and for all of you to put your hands together to have had more.
Thank you, Julia, and our panelists. Please remain on stage for a quick photo. Please now look towards the left for our media friends. Okay. Thank you. Thank you to our speakers. Ladies and gentlemen, we'll now take a 15-minute break. Coffee and refreshments will be served in the foyer area, and we'll see you shortly. Thank you.
बहुत सारे जो इस तरह के हाउसिंग प्रोजेक्ट्स होते हैं, आमतौर पे ये देखा गया है कि वो मार्केटिंग और एडवर्टाइजिंग पे ज़्यादा फोकस करते हैं, लेकिन ग्राउंड रियलिटी बिल्कुल उसके बरक्स होती है। लोगों का ये भी एक थॉट प्रोसेस है कि जी प्रोजेक्ट शुरू तो हो जाते हैं, मुकम्मल नहीं होते, डिलीवरी नहीं होती उन प्रोजेक्ट्स की। तो गुलमोहर सिटी के लिए आपने क्या टाइमलाइन रखी हुई है? अक्सर लोग ऐसे प्रोजेक्ट्स में फ्रॉड से भी बहुत डरते हैं। आप बतौर चेयरमैन उन लोगों को क्या कहना चाहते हैं जो यहाँ पे इन्वेस्ट कर रहे हैं, और उनको किस किस्म की गारंटी देना चाहते हैं? यूजुअली फ्रॉड थोड़ा सा होता है। अस्सलामुअलैकुम जी, कैसे हैं आप लोग? कनेक्टेड करंट्स वाइब्रेंट सिनेरियो के एक और एपिसोड में मैं हाजिर हूँ, और आज मैं जिन साहब से बात करना चाह रही हूँ वो मेरे बड़े पर्सनल फेवरेट हैं, लेकिन उनका थोड़ा सा इंट्रोडक्शन आपके लिए करवा दूँ। आज मैं बात कर रही हूँ कैप्टन रिटायर्ड नदीम खान से, और अब वो गुलमोहर सिटी के चेयरमैन हैं। उनसे जानते हैं कि गुलमोहर सिटी क्या है, उसके बारे में उनके क्या एस्पिरेशंस हैं, एंड हाउ डज ही प्लान टू टेक द प्रोजेक्ट फॉरवर्ड। अस्सलाम वालेकुम कैप्टन साहब, कैसे हैं आप?
वालेकुम अस्सलाम, मैं ठीक हूँ, आप खैरियत से हैं?
मैं बिल्कुल ठीक हूँ, बहुत शुक्रिया, एंड बहुत शुक्रिया यहाँ आने के लिए। और बहुत सारे ऐसे सवाल हैं जो हम सब आपसे पूछना चाहते हैं, सो थैंक यू वंस अगेन कि आप यहाँ आए। मुझे ये बताएं कैप्टन साहब, मैं सबसे पहले ये सवाल शुरू करूँगी कि आम तौर पे लोग ये सोचते हैं कि कराची शहर से दूर अगर कोई प्रोजेक्ट है तो वहाँ इन्वेस्टमेंट नहीं करनी चाहिए। आप लोगों को किस तरह कन्विंस करते हैं कि गुलमोहर सिटी जो है वो वाकई एक मुस्तकबिल का शहर बन सकता है?
देखिए, मैं आपको सबसे पहले बात बताना चाहता हूँ कि जो भी बड़े सिटीज़ होते हैं उनके अपने चैलेंजेस होते हैं। अब उन चैलेंजेस को मीट करने के लिए पूरी दुनिया के अंदर ये कॉन्सेप्ट है कि सैटेलाइट सिटीज़ क्रिएट किए जाते हैं टू कंट्रोल दी अर्बन डेवलपमेंट और बेहतर लोगों को इंफ्रास्ट्रक्चर देने के लिए। तो अभी आप देखें जो M9 है, कराची हैदराबाद मोटरवे जिसको कहते हैं, जितने भी मेगा डेवलपमेंट हो रही है वो इस एक्सिस के ऊपर हो रही है। चाहे आप उसको DHA देख लें या नेवल एंकरेज वगैरह, या डिफरेंट प्रोजेक्ट्स हैं। और वो क्यों हो रही है? वो इसलिए हो रही है क्योंकि कराची शहर का जो अभी इंफ्रास्ट्रक्चर है वो इधर की आबादी को सस्टेन नहीं कर सकता, और जो सर्विसेज हैं वो बेहतर अंदाज में प्रोवाइड नहीं की जा सकती। इसलिए सारी की सारी मेगा डेवलपमेंट इस एक्सेस के ऊपर हो रही है। और फ्यूचर में आप देखेंगे कि जिस तरह इंडस्ट्रियलाइजेशन नूरियाबाद वगैरह में हो रही है, तो अल्टीमेटली पॉपुलेशन शिफ्ट यहीं होगा, और कोई नेचुरल एक्सेस बनता नहीं है जिस पर पॉपुलेशन शिफ्ट हो सके। इसलिए आज जो लोग वहाँ पे इन्वेस्टमेंट कर रहे हैं अल्टीमेटली दे विल बी बेनिफिशियरी। और गुलमोहर सिटी भी इसी उसमें, क्योंकि हम अब जो बाकी प्रोजेक्ट्स हैं उसमें जैसे DHA आप देख लें वो बहुत हाई एंड मार्केट है, तो हम जो प्रोजेक्ट हमने डिज़ाइन किया वो बेसिकली इस कॉन्टेक्स्ट में किया है कि एक आम आदमी की नीड्स को कैटर कर सके और उनको लिविंग अपॉर्चुनिटीज़ प्रोवाइड की जा सकें फ्यूचर में।
नदीम साहब, मुझे बताइए कि बहुत सारे जो इस तरह के हाउसिंग प्रोजेक्ट्स होते हैं, आमतौर पे ये देखा गया है कि वो मार्केटिंग और एडवर्टाइजिंग पे ज़्यादा फोकस करते हैं, लेकिन ग्राउंड रियलिटी बिल्कुल उसके बरक्स होती है। आपका और गुलमोहर सिटी का इस पे क्या स्टांस है?
मैं समझता हूँ कि देखिए, मार्केटिंग जो होती है, मार्केटिंग और साथ साथ उसकी एग्जीक्यूशन, ये दोनों चीज़ें इंपॉर्टेंट है। अनफॉर्चुनेटली होता ये है कि हम बहुत अच्छी एक हाइप क्रिएट करते हैं, प्रोजेक्शन क्रिएट करते हैं कि जी लोगों को ख्वाब दिखाते हैं जैसे कि हकीकत में कोई हम जन्नत बनाने जा रहे हैं। वेयर एज वो, क्योंकि आप देखें ये सारी चीज़ें तो एनिमेटेड होती हैं, तो इस पर ये दिखाना बड़ा आसान होता है। असल चीज़ क्या होती है, मार्केटिंग भी किसी भी प्रोजेक्ट के लिए ज़रूरी है कि आप अपनी प्रोडक्ट के बारे में अवेयरनेस दें। ज़्यादा इंपॉर्टेंट चीज़ है उसकी एग्जीक्यूशन। और अब जाहिर सी बात है, जिस तरह आप देख रही हैं कि इन्फॉर्मेशन का दौर है और लोगों की एक्सेस बहुत आसान है, तो अब आप देखें कि आप थ्रू मल्टीपल चैनल्स आप देख सकते हैं कि जी डेवलपमेंट कैसी हो रही है, काम कैसा हो रहा है, एंड दैट इज़ द की। क्योंकि मार्केटिंग की एक लाइफ होती है। फॉर एग्जांपल, आपने एक प्रोजेक्ट लॉन्च किया, 2 महीने 3 महीने उसकी कैंपेन की, उसके बाद अगर आप उसकी एग्जीक्यूशन नहीं कर रहे तो उसको सस्टेन नहीं कर सकते।
कैप्टन साहब, आपने बहुत अच्छी बात की, लेकिन मुझे एक बात बताइए कि अक्सर मार्केट के अंदर ये जनरल परसेप्शन है कि प्रोजेक्ट्स में NOC या तो नहीं होता या NOC का प्रॉमिस होता है वो बाद में नहीं होता। तो गुलमोहर सिटी इस बारे में लोगों को क्या गारंटी दे सकता है?
देखिए, NOC के बगैर तो आप किसी भी प्रोजेक्ट को मार्केट नहीं कर सकते। अच्छा, इस हवाले से आप क्योंकि जो अथॉरिटीज़ हैं जहां हम फॉल कर रहे हैं उसमें 7 डेवलपमेंट अथॉरिटी है, सिंध बिल्डिंग कंट्रोल अथॉरिटी है, तो उधर जाके भी वेरीफाई कर सकते हैं। और हमारा जो प्रोजेक्ट है ये मेन रोड के ऊपर, इट हैज़ दी वन ऑफ द लार्जेस्ट फ्रंट इस M9 एक्सेस के ऊपर। और इस पे अल्हम्दुलिल्लाह हमने पूरी साइट पे ब्रांडिंग की हुई है, डेवलपमेंट डेली कर रहे हैं। तो इसमें इसलिए एनओसी का कोई इसमें प्रॉब्लम नहीं है। और अदरवाइज वैसे भी अगर कोई इसको वेरीफाई करना चाहता है तो जो कंसर्न अथॉरिटीज़ हैं उनसे जाके भी वेरीफाई किया जा सकता है, कोई मसला नहीं है इसमें।
अच्छा, कराची में रहने वाले और अक्सर लोग ये समझते हैं कि कराची से बाहर अगर कोई प्रोजेक्ट है तो उसमें बहुत मसले होंगे, लाइट का, पानी का, सिक्योरिटी का, जैसे हम पहले भी इंटरव्यू से पहले भी बात कर रहे थे। तो साहब मुझे ये बताइए कि गुलमोहर सिटी के ने इन चैलेंजेस के बारे में क्या सोचा है और इसका कंटिजेंसी प्लान गुलमोहर सिटी ने क्या बनाया है?
ये बड़ा आपने अच्छा क्वेश्चन किया। इसके बारे में मैं आपको ये बताता हूँ कि देखें, पहली तो बात ये कि कराची के जो चैलेंजेस है ना वो आउटसाइड दी कराची ये चैलेंजेस नहीं है। नंबर 1 आपने इलेक्ट्रिसिटी की बात की है, वहाँ पे वापडा है, के इलेक्ट्रिक नहीं, हैस्को जिसको हम कहते हैं, हैदराबाद इलेक्ट्रिक सप्लाई। अच्छा, एक चीज़ मैं यहाँ पे ऐड ऑन करना चाहूँगा कि पाकिस्तान के अंदर जो पावर है ना ये सरप्लस है। हमें लगता है कि पाकिस्तान के अंदर पावर शॉर्टेज है, पाकिस्तान के अंदर पावर सरप्लस है। प्रॉब्लम जो है वो डिस्ट्रीब्यूशन चैनल्स का है। और अभी जिस तरह ये IPPs के कॉन्ट्रैक्ट्स बहुत सारे एक्सपायर होने जा रहे हैं, तो वापडा जो है इसको इंश्योर कर रहा है कि जितने भी हाउसिंग प्रोजेक्ट्स या चीज़ें उनको इलेक्ट्रिसिटी प्रोवाइड की जाए। अब जिस स्केल पे हम काम कर रहे हैं, जाहिर सी बात है हम उनसे ग्रिड लेंगे ताकि हम लोगों को अनइंटरप्टेड पावर सप्लाई कर सकें। एक बात ये, दूसरी चीज़ ये है कि यहाँ पे एक प्रॉब्लम आता है लोड शेडिंग का, तो उसके लिए हमने बैकअप प्लान बनाया कि हम ग्रीन एनर्जी के ऊपर, जिसमें विंड टर्बाइंस हैं और साथ साथ जो सोलर एनर्जी है उस पर हम काम कर रहे हैं एज अ बैकअप, ताकि लोगों को अनइंटरप्टेड पावर सप्लाई वहाँ प्रोवाइड कर सके। दूसरी चीज़ जो आपने पूछी है, पानी की बात की है। पानी आपको पता है कराची के अंदर तो एक मेजर चैलेंज है पानी का। वहाँ पे ये चैलेंज इसलिए नहीं क्योंकि अंडरग्राउंड वाटर टेबल भी बहुत हाई है गुलमोहर सिटी के अंदर। हमने सारा उसका जो जियोलॉजिकल सर्वे है वो सब कराया हुआ है, तो वहाँ पे इस किस्म का चैलेंज मौजूद नहीं है पानी के हवाले से। तीसरी जो चीज़ है, अब गैस का जो मसला है उसमें अब तो मुख्तलिफ उस पर भी काम कर रही हैं कि जी वो LNG बेस्ड प्लांट्स लग जाते हैं, लेकिन बाय नाउ जैसे आपने और जगहों पे भी देखा होगा कि जो LPG सिलेंडर्स हैं वही एक चीज़ है, बिकॉज गैस एक ऐसी चीज़ है जो आप खुद से प्रोड्यूस नहीं कर सकते फ़िलहाल अभी तक के उसमें। तो वो हम देखेंगे कि अगर गवर्नमेंट ने प्रोवाइड की तो ठीक है, नहीं तो विल प्रोवाइड टू आवर रेजिडेंट्स। हम अपने रेजिडेंट्स को खुद गैस इन टर्म्स ऑफ LPG सिलेंडर्स वगैरह वो देंगे।
ये तो आपने बात कर ली बिजली पानी की। लोगों का ये भी एक थॉट प्रोसेस है कि जी प्रोजेक्ट शुरू तो हो जाते हैं, मुकम्मल नहीं होते, डिलीवरी नहीं होती उन प्रोजेक्ट्स की, और फिर उसका टाइमलाइन बढ़ता जाता है। तो गुलमोहर सिटी के लिए आपने क्या टाइमलाइन रखी हुई है?
देखिए, हमने इसका आगाज़ किया था 2022 के अंदर, और हमने 5 इयर्स का जो प्लान बनाया था, और उसमें मैं एक बात आपको कहना चाहूँगा कि अल्हम्दुलिल्लाह हम इसको टाइम से पहले डिलीवर कर रहे हैं। जैसे हम ये पोजेसन जो है इसका ड्यू था 2027 में, और अभी हम इसको 2025 में ही पोजेसन देने जा रहे हैं। तो ये तकरीबन 2 साल पहले हम लोगों को पोजेसन देने जा रहे हैं, ताकि लोगों का जो एक ये जनरल कॉन्सेप्ट होता है कि डेवलप नहीं होगा, डिलीवर नहीं होगा। अभी हमारा कमिंग नवंबर के अंदर एक पूरा ब्लॉक हमने कंप्लीट कर लिया और उसकी हम पोजेसन देने जा रहे हैं, ब्लॉक C जो हमारा। उसके बाद हमने हर 2 महीने के बाद डिफरेंट ब्लॉक्स का है, उनकी जाहिर सी बात है जब एक चीज़ करते हैं तो हम उसकी टाइमलाइन साथ साथ देते चल जाएंगे। नेक्स्ट मंथ हमने एक इवेंट रखा है वहाँ पे, जिसमें हमने लोगों को बुलाया है कि आप आएँ और अपने फिज़िकल पोजेसन अपने जो प्लॉट्स का है वो ले लें हमसे। तो इससे क्या है कि लोगों को ये बात जो जनरली एक परसेप्शन होता है कि जी आप लोगों से पैसे लेते रहते हैं, काम नहीं करते, डिलीवर नहीं करते, डिले कर देते हैं, तो उसका बेस्ट आंसर यही है कि हम लोगों को ऑन ग्राउंड बुला के उनके हैंड ओवर कर रहे हैं चीज़ें।
कैप्टन साहब मुझे ये बताइए कि अक्सर लोग ऐसे प्रोजेक्ट्स में फ्रॉड से भी बहुत डरते हैं। आप बतौर चेयरमैन उन लोगों को क्या कहना चाहते हैं जो यहाँ पे इन्वेस्ट कर रहे हैं, और उनको किस किस्म की गारंटी देना चाहते हैं जो वाकई काफ़ी डरे हुए होते हैं, क्योंकि इन प्रोजेक्ट्स में यूजुअली फ्रॉड थोड़ा सा होता है?
ये बिल्कुल आपने बड़ा अच्छा पॉइंट रेस किया। फ्रॉड तो जाहिर सी बात है रियल स्टेट में पाकिस्तान के अंदर ख़ास तौर पे बहुत ज़्यादा फ्रॉड है कि लोगों ने पैसे दिए और वो 20-20 साल से ना प्रोजेक्ट डिलीवर होता है और ग्राउंड पे भी कोई काम नहीं होता। अच्छा, मैं इसमें कहूँगा कि देखिए, मैं हर कोई अपने बारे में अच्छी बात करता है, तो इसमें मेरे अल्फाज से ज़्यादा अहमियत जो है जो ग्राउंड रियलिटीज़ हैं उनकी होनी चाहिए। अब 2 चीज़ें होती हैं जो किसी भी प्रोजेक्ट को स्ट्रेंथन करती हैं। नंबर 1 तो होता है कि उसके पास रेलिवेंट NOCs हों, डिपार्टमेंट्स से अप्रूवल्स मौजूद हों, वो एक चीज़ है। दूसरी चीज़ जो होती है कि उसकी एग्जीक्यूशन किस तरीके से हो रही है। अब क्या है कि हम तो इसको लोगों को अप्रिशिएट करते हैं कि वो जाएं साइट के ऊपर विज़िट करें, और हम खुद साइट पे इवेंट्स ऑर्गेनाइज़ करते हैं, विज़िट्स कंडक्ट कराते हैं कि आप देखें कि हमारी डेवलपमेंट पेस किस तरह चल रही है। फिर प्लस हमने एक अपनी एक ऐप डेवलप की है जिसके थ्रू हमारी पास जो भी डेवलपमेंट अपडेट्स होती हैं वो रेगुलरली क्लाइंट्स को जाती रहती हैं ताकि उनको पता चलता रहे कि क्या हो रहा है। तो ये 2 पैरामीटर्स होते हैं जिससे आप फ्रॉड को प्रिवेंट कर सकते हैं। और इसके अलावा एक जो तीसरा चीज़ होती है कि कोई लोग आपके नाम पे अगर पैसे ले रहे हो कि जी आपका प्रोजेक्ट चल रहा है, और बाज़ वक़्त होता है कि कुछ लोग आपके नाम से लोगों को भी फ्रॉड कर सकते हैं ना कि पैसे ले रहे हो, तो उस चीज़ को भी हमने कैटर फॉर करने के लिए किया है कि हमारा सिस्टम है कि जो भी हमारे पास बुकिंग कराता है तो वो हमसे 7 डेज़ के अंदर अंदर वेरिफिकेशन कर ले और हमारे व्हाट्सएप नंबर्स हैं उन पे कॉल करके चेक कर ले कि ये वाकई आपके प्रोजेक्ट में बुकिंग हुई है या नहीं हुई है, ताकि ये लोगों को आगे चल के नुकसान ना हो।
कैप्टन साहब, महंगाई के बारे में आपको भी पता है, मुझे भी पता है, और महंगाई के इस दौर में अपना घर लेना तो एक ख्वाब बन गया है। आप मुझे ये बताइए कि गुलमोहर सिटी आम आदमी का ये ख्वाब किस तरह पूरा कर सकती है?
अच्छा, ये कराची के अंदर या हैदराबाद के अंदर रहने वाले जो लोग हैं, आप देखें इधर की 95% जो पॉपुलेशन है ना, वो यहाँ पे प्रॉपर्टी परचेज नहीं कर सकते। उसकी वजह है कि कॉस्ट ऑफ प्रॉपर्टी जो बहुत हाई है और वो आप उनकी जो इनकम है उससे मैच नहीं करती। तो हमने इसको बड़ा इजी टर्म्स पे किया। एक तो हमने ऐसी मार्केट को टैप किया है जो मिडिल क्लास लोग हैं जिनके लिए अफोर्डेबिलिटी एक चैलेंज है। उसके लिए हमने बहुत इजी पेमेंट प्लान बनाया है ताकि हर कोई वहाँ पे जो है अपना घर बनाने का ख्वाब है या प्लॉट लेने की जो चाह रहा है वो एक्वायर कर सके। तो इट इज़ वेरी कस्टमर फ्रेंडली पेमेंट प्लान एक्चुअली। और लॉन्ग टर्म पे स्ट्रेच इसलिए किया ताकि सब लोग इसको मैनेज कर सकें।
कैप्टन साहब, मेरा आपसे एक सवाल है, वो ये है कि जहाँ लोग ये बात भी करते हैं कि इतने सारे प्रोजेक्ट्स शुरू हुए और नाकाम हो गए, मुझे ये बताइए कि गुलमोहर सिटी कैसे कामयाब होगा? वो क्या चीज़ें हैं जो आप सोचते हैं गुलमोहर सिटी को एक सक्सेसफुल डेवलपमेंट प्रोग्राम या प्लांट बना सकते हैं?
अच्छा, इसमें मैं एक चीज़ आपको बताऊं कि देखें, सबसे जो इम्पोर्टेंट चीज़ होती है ना, इसमें कोई रॉकेट साइंस नहीं है। किसी भी प्रोजेक्ट को कामयाब करने के लिए 2-4 चीज़ें बड़ी इंपॉर्टेंट होती हैं, जिसमें सबसे नंबर 1 चीज़ होती है टाइमली एग्जीक्यूशन। कि आप आज जो, क्योंकि होता क्या है कि जब आप लोगों से प्रॉमिस किया कि हम 5 साल में डिलीवर करके देंगे और जब आप इसको स्ट्रेच करते हैं 10 ईयर्स 12 ईयर्स पे, तो डेवलपमेंट कंस्ट्रक्शन कॉस्ट इतनी हाई हो जाती है कि वो वाइबल ही नहीं रहता। फिर लोग सोचते हैं कि यार मैंने प्लॉट बेचा था इतना सस्ता, या ये जगह इतनी सस्ती बेची थी, आज तो इसकी रॉ लैंड की वैल्यू इतनी ज़्यादा बढ़ गई है। तो वहाँ पे जो फिर प्रॉब्लम्स शुरू होते हैं। तो सबसे इम्पॉर्टेंट चीज़ होती है टाइमली डिलीवरेंस। और टाइमली डिलीवरेंस के लिए यही है कि जो आपने काम है उसको आपने जो अपने प्लान्स बनाए हुए हैं, वीकली, मंथली, ईयरली प्लान्स हैं, उसको आप अमल करते चले जाएं तो एग्जीक्यूट हो जाएगा। अगर आप इसको डिले करेंगे तो अल्टीमेटली एग्जीक्यूट नहीं होगा। वहाँ पे भी अगर आप M9 की ख़ास तौर पे बात करें, कराची के किसी भी पार्ट की बात करें, तो प्रॉब्लम्स यही होती हैं कि लोगों से पैसे ले लिए जाते हैं, वादे किए जाते हैं, लेकिन काम नहीं किया जाता। जब आप काम नहीं करेंगे तो डिलीवर नहीं होगा। और कोई इसमें वो नहीं है, रॉकेट साइंस नहीं है इसमें कोई भी।
कैप्टन साहब, मुझे ये बताइए कि वहाँ गुलमोहर सिटी में जो रेजिडेंट्स होंगे, वहाँ के जो बच्चे हैं वो किस तरह, क्योंकि जाहिर सी बात है शहर से दूर है तो स्कूल से भी दूर होगा, तो उसको आप किस तरह केटर करते हैं?
देखिए, गुलमोहर सिटी जो ना एक सेल्फ सस्टेन्ड सिटी है, तो वहाँ पे हमने हर चीज़ को केटर फॉर किया। अभी आपने क्योंकि क्वेश्चन पर्टिकुलरली एजुकेशन का किया तो मैं उसके बारे में बात करूँगा। एजुकेशन जो है किसी भी जो नेशन है उसकी बैकबोन है। आप दुनिया के अंदर देखें, अगर आप, बहुत सारे ऐसे कंट्रीज़ हैं जो लैंड लॉक कंट्रीज़ हैं, ठीक है, वहाँ पे सिर्फ एजुकेशन के थ्रू उन्होंने अपनी इकोनॉमी को सस्टेन किया और ग्रो किया। पाकिस्तान के अंदर अनफॉर्चुनेटली एजुकेशन पे, और ख़ास तौर पे ऐसी एजुकेशन पे जो कि अब दुनिया में जिसकी ग्रोइंग डिमांड है, जैसे आर्टिफिशियल इंटेलिजेंस है, रोबोटिक्स है, इन चीज़ों पे बहुत ज़्यादा ख़ास तवज्जो नहीं दी जा रही है अभी। और आप देखें कि अगले 10 सालों में जो लोग आर्टिफिशियल इंटेलिजेंस से इक्विप्ड नहीं होंगे उनके लिए सर्वाइव करना एक बहुत बड़ा प्रॉब्लम बन जाएगा। और मुख्तलिफ आप देखती हैं इधर इंस्टीट्यूट्स बन रहे हैं जिधर AI वगैरह पढ़ाई जा रही है, लेकिन उसकी कॉस्ट बहुत ज़्यादा है। तो हमने वहाँ पे ये किया है कि जो पहला हम अपना इधर एजुकेशन कॉम्प्लेक्स डेवलप करने जा रहे हैं, गुलमोहर एजुकेशन कॉम्प्लेक्स, उसका एरिया हमने रखा है 17,000 स्क्वायर यार्ड्स का। और उसके अंदर हम सारी वो एजुकेशन अपने बच्चों को आने वाले दिनों में इंशाल्लाह देंगे जिसकी वर्ल्ड ओवर डिमांड है, और जिसके थ्रू लोग अपने आप को इस काबिल कर सकेंगे कि वो अच्छी अर्निंग कर सके, जिसमें आर्टिफिशियल इंटेलिजेंस है, साइबर सिक्योरिटी है, रोबोटिक्स है, इस तरह की चीज़ें जो कि आजकल डिमांड में है। और साथ साथ वहाँ पे सबसे जो इसकी इम्पोर्टेंट चीज़ है, अब इतनी जब हम फैसिलिटीज़ दे रहे हैं तो लोगों के जहन में अक्सर ये मुझसे भी पूछते हैं कि इसकी कॉस्ट क्या होगी। तो कॉस्ट हमने इसको सब्सिडाइज इधर किया है, क्योंकि हमारे नज़दीक एजुकेशन जो है ना वो एक रिस्पॉन्सिबिलिटी है, ये बिज़नेस नहीं है। तो वहाँ पे जो लोग भी रेजिडेंट्स होंगे उनको हम बहुत ही चीप कॉस्ट के ऊपर विदाउट प्रॉफिट ये सारी एजुकेशन प्रोवाइड करेंगे, ताकि वो लोग वर्ल्ड क्लास एजुकेशन भी हासिल कर सकें, बहुत ही लो कॉस्ट पे हासिल कर सकें और बाद में नेशन बिल्डिंग में अपना रोल प्ले कर सकें।
कैप्टन साहब ये बताइए कि कराची से गुलमोहर सिटी इतना दूर है, तो इसकी कनेक्टिविटी किस तरह होगी, आपने क्या प्लान्स किए हैं?
अच्छा, अभी आप ये देखें कि जैसे मलिर एक्सप्रेस का आपने नाम सुना होगा, जिसे शारे भुट्टो कहते हैं, तो वहाँ पे अभी ये है कि इन्होंने फरवरी तक इसको लिंक करना है, जो गवर्नमेंट का प्लान है, और उन्होंने काफ़ी ज़्यादा काम कर भी लिया है, काफ़ी सारे, तो कायदाबाद तक तो आप इस पे जा सकते हैं आराम से। तो आगे इनका प्लान ये है कि इसको M9 मोटरवे से कनेक्ट कर देंगे। अब जब इसको M9 मोटरवे से कनेक्ट कर देते हैं तो फिर गुलमोहर सिटी और कराची सिटी का जो डिस्टेंस है वो सिर्फ 25 मिनट्स का डिस्टेंस रह जाएगा। अब उस 25, क्योंकि ये बिल्कुल आपका सिग्नल फ्री कॉरिडोर होगा और इसमें पोल्यूशन फ्री है, फिर प्लस ये कि इसके अंदर हम लोग जो हैं वो सब्सिडाइज ट्रांसपोर्ट सिस्टम इंट्रोड्यूस कर रहे हैं। तो वहाँ पे जो भी हमारे रेजिडेंट्स होंगे, हम मुख्तलिफ अपने इधर पॉइंट्स इस्टेब्लिश करेंगे जहाँ से वो हमारी जो ट्रांसपोर्ट है उसमें बैठ के और गुलमोहर सिटी पहुँच सकेंगे। अब इसमें आप ये देखें कि कराची के किसी एक शहर पार्ट से, फॉर एग्जांपल आप आई चुंदरीगढ़ से नाजमाबाद जाएं या आई चुंदरीगढ़ से या किसी जहां नर्सरी के इलाके से भी अगर आप मलिर के एरिया में जाएं तो शाम के टाइम पे 1 से 1.5 घंटा आपको लग जाता है अपने घर पहुंचने में। फिर कॉस्ट ऑफ फ्यूल देख लें, फिर आप जो पोल्यूशन देखते हैं वो सारा आप इफ़ेक्ट देख लें, और उसके अगेंस्ट अगर आप गुलमोहर सिटी में रहेंगे तो आपको ज़्यादा से ज़्यादा 30 मिनट्स में अपने घर में होंगे, और वो भी बड़ा पीसफुल, सुकून से, बगैर किसी शोर शराबे के।
नदीम साहब, आपने अभी सब्सिडाइज्ड ट्रांसपोर्ट की बात की, लेकिन बहुत छोटी बात की। आप इसके ऊपर प्लीज़ थोड़ी सी और तफसील से बताएं, क्योंकि ये बहुत इंटरेस्टिंग एक कॉन्सेप्ट भी है और लोगों को ये भी पता होना चाहिए कि किस तरह से आपने इसको ऑपरेशनल बनाना है।
अच्छा, इसमें हम जो है ना शटल सर्विसेज अपनी सर्विस शुरू करेंगे, जिसमें हमारे पास बसेज होंगी, और वो बसेज भी, जितनी भी शटल सर्विस है, जो बसेज हैं हमारी, वो सारी EV बसेज होंगी, ताकि एक तो इको फ्रेंडली भी हो और इन्वायरमेंट को देखते हुए हमने उसको किया, और फिर उसकी कॉस्ट भी जाहिर सी बात है मैनेजेबल है। तो इस वजह से हम इसको विल बी इन अ पोजीशन कि हम इसको सब्सिडाइज कर सकेंगे लोगों के लिए, और ओवर चार्ज नहीं करेंगे। जो कॉस्ट है, मिनिमम कॉस्ट होगी, जो कॉस्ट ऑफ ऑपरेशन है, वही हम उनसे लेंगे।
कैप्टन साहब, मुझे बताइए कि फॉरेस्ट व्यू विला क्या है, आपने इसका नाम क्या सोच के रखा है, और क्या ये वाकई सच है कि फॉरेस्ट व्यू विला में 99 लाख रुपए में एक विला मिलता है?
अच्छा, वैसे आपने एक गो में 3 क्वेश्चंस किए ना, तो मैं इसका स्टेप बाय स्टेप आंसर कर देता हूँ। सबसे पहले तो हमने इसका नाम फॉरेस्ट व्यू विला क्यों रखा? देखें, असल में क्या है कि अगर आप कराची को देखें तो ये कंक्रीट का एक जंगल है, और इस वक्त जो पूरी दुनिया को और ख़ास तौर पे पाकिस्तान को जो चैलेंजेस हैं वो क्लाइमेट चेंज के चैलेंजेस हैं, और डिफॉरेस्टेशन एक बहुत बड़ा प्रॉब्लम है। तो हम क्या कर रहे हैं कि हमने सबसे पहले तो ये कि जो गुलमोहर के अंदर फॉरेस्ट लगा रहे हैं, तो क्योंकि यहाँ पे हमने एक बड़ा फॉरेस्ट बना रहे हैं, एक व्यू भी बड़ा अच्छा मिलेगा, नेचर फ्रेंडली है, और ये इट इज़ क्लोज टू द नेचर, तो इसलिए हमने इसका नाम भी नेचर के बेस पे ही रखा, फॉरेस्ट व्यू विला। दूसरी चीज़ जो आपने इस पर की कि क्या है, बेसिकली ये एक हमने प्लान बनाया है, 8 साल का पेमेंट प्लान बनाया है, जिसमें हमारा कॉन्सेप्ट ये है कि लोग 4 साल में वहाँ पे शिफ्ट हो जाएं, 4 साल में अपने घर का पोजेशन ले लें, और बाकी की जो उनकी रिमेनिंग इंस्टॉलमेंट्स हैं वो वहाँ अपने घर में रहते हुए 4 साल में अदा करें। तो वो ऐसे ही होगा जैसे आप अपने घर में एक रेंट देते हुए अपने घर के मालिक बन जाएंगे। तीसरी चीज़ जो आपने 99 लाख का कहा है, तो अभी इसके प्राइसेस 99 लाख ही हैं, और जाहिर सी बात है ग्रेजुअली इट विल इंक्रीज।
ठीक है।
और बाय द टाइम हम ये लोगों को पोजेशन हैंड ओवर करते हैं तो प्रॉपर्टी प्राइसेस जो है एक्सपेक्टेडली यही है कि ये डबल हो जाएंगे, और जब वो अपनी पेमेंट पूरी करते हैं तो उस वक्त तक और ये मज़ीद ग्रो कर जाएंगे इंशाल्लाह ताला। तो ये एक लोगों को बड़ा बेनिफिट भी होगा, एक तो ये कि वो अपने घर के ओनर भी बन जाएंगे, साथ उनको प्रॉपर्टी एप्रिसिएशन भी मिलेगी। अब जैसे 99 लाख का है तो हमने इसका प्राइस अभी इसलिए कम रखा है कि लोगों की अफोर्डेबिलिटी में आ जाए, और मैक्सिमम लोग इधर इस चीज़ को अफोर्ड कर सकें, और 99 लाख को भी हमने 8 साल पे स्ट्रेच कर दिया। तो अच्छा, साथ हमने, जैसे मैंने आपकी एजुकेशन की बात की, साथ हमने इसमें एजुकेशन के बेनिफिट्स को भी कपल किया है। तो उसका फ़ायदा ये होगा कि जैसे आप यहाँ रहते हैं तो आप एक घर का रेंट पे करते हैं, साथ बच्चों की फीस पे करते हैं, तो उस तमाम एक्सपेंस को आप जब क्यूमुलेट कर लेते हैं तो उससे बहुत कम में आप घर के मालिक भी बन जाएंगे और बहुत अच्छी एजुकेशन भी अपने बच्चों को दे सकेंगे।
कैप्टन साहब, थैंक यू सो मच कि आपने बताया कि ये 99 लाख रुपीस जो हैं उसके पीछे क्या फ़िलॉसफी है, क्योंकि मुझे लग रहा था कि आपने एक मार्केटिंग की कोई गिमिक लगाया है कि वो 1 करोड़ का ना हो और वो 99 में जो है साइकोलॉजिकल जो प्राइसिंग होती है वो है। ऐसा तो नहीं है?
नहीं, इस तरह नहीं है। असल में जब हमने ये प्री लॉन्च में शुरू किया था तो तब हमने इसको 90 का रखा था, देन फिर ये 95 का हो गया, और अब जब इसको हमने लॉन्च किया है, लोगों में लेके गए तो 99 लेके, तो वो एक सिस्टम के तहत ही इसके प्राइसेस बढ़ रहे हैं। कुछ टाइम बाद ये 1 करोड़ 10 लाख का हो जाएगा तो फिर ये आपका जो
तो साइकोलॉजिकल प्राइसिंग इस पे नहीं अप्लाई करती?
नहीं, साइकोलॉजिकल प्राइसिंग नहीं है ये
अच्छा, नदीम साहब, आपने डिफॉरेस्टेशन की बात की। मैं आपको थोड़ा सा सवाल पूछना चाह रही हूँ क्लाइमेट चेंज के हवाले से। इसके ऊपर भी थोड़ी सी रोशनी डालें कि गुलमोहर सिटी, आपने बताया कि डिफॉरेस्टेशन और उसको किस तरह आप लिंक करते हैं टू क्लाइमेट चेंज, एंड आपके क्या व्यूज़ हैं कि ये चीज़ें जो आपने गुलमोहर सिटी में जिस तरह प्लान की हैं, ये किस तरह हमें हेल्प कर सकती हैं आगे जाके क्लाइमेट चेंज की प्रॉब्लम के साथ?
आप देखें, पूरी दुनिया के अंदर जो कार्बन डाइऑक्साइड इमिशंस हैं उसका 15% जो कंट्रीब्यूशन है दैट गोज़ टू डिफॉरेस्टेशन। ठीक है, तो आप जब डिफॉरेस्टेशन करेंगे तो इन्वायरमेंट पे इफेक्ट आएगा। अच्छा, जब फॉरेस्टेशन आप करते हैं तो उससे बारिशें होती हैं, उसका अच्छा जो बारिश होती है उसका जो पानी है, जैसे फॉर एग्जांपल वो ज़ाया नहीं होता और ये अंडरग्राउंड जो आपका स्टोरेज है उसमें ऐड ऑन करता है, प्लस ये कि टेम्परेचर को रिड्यूस करता है और ऑक्सीजन, फ्रेश ऑक्सीजन उसमें प्रोवाइड करता है। अब जाहिर सी बात है, क्लाइमेट चेंज अब दुनिया के अंदर जो मेगा ट्रेंड्स हैं उसके अंदर क्लाइमेट चेंज इज़ वेरी इंपॉर्टेंट। और आप ये देखें कि अब पूरी दुनिया के बारे में, इसके बारे में बात हो रही है ना, तो हम क्या कर सकते हैं? हम ये कर सकते हैं कि देखिए, हमारी अपनी एक लिमिटेड कैपेसिटी है, उस कैपेसिटी में हम ये कर सकते हैं कि मैक्सिमम फॉरेस्टेशन करें। तो जो पार्ट हम इसमें प्ले कर सकते हैं वो हम अपना पार्ट प्ले कर रहे हैं, और इससे इसका अपने स्केल के ऊपर जो मैक्सिमम बेनिफिट या मैक्सिमम कंट्रीब्यूशन इसमें हम कर सकते हैं वो हम कर रहे हैं।
मेरे ख्याल से बहुत अच्छी बात है जो मैं कहना चाहूँगी कि हम लोग अगर अपनी पर्सनल कैपेसिटीज़ में करें काम क्लाइमेट चेंज के लिए तो बहुत फ़र्क पड़ सकता है। जैसे आपने कहा कि इन योर ओन पर्सनल कैपेसिटी, इन द कैपेसिटी ऑफ द प्रोजेक्ट, आप ये बात कर रहे हैं कि आपने इस चीज़ को बहुत कंसिडरेशन दिया है कि क्लाइमेट चेंज एक बहुत बड़ी प्रॉब्लम है जो आज नहीं तो कल बल्कि हो ही रहा है, हम सब उसके इफ़ेक्ट्स तो देख ही रहे हैं। तो ये बहुत अच्छी चीज़ है जो आप सोच रहे हैं कि शहर से दूर एक इस तरह का प्रोजेक्ट है जो सेल्फ सस्टेनिंग भी है, लेकिन वो ये सारे कंसिडरेशंस देख रहा है।
बिल्कुल, इसमें मैं एक चीज़ और ऐड करना चाहूँगा कि देखिए, जो कोई भी चेंज है ना, दैट स्टार्ट्स फ्रॉम आपके अपने आप खुद से शुरू होता है कि मैं उस चेंज को लाने में अपना क्या रोल प्ले कर सकता हूँ। तो जब आप अपना रोल प्ले करते हैं, इस तरह सारे इंडिविजुअल्स अपना रोल आहिस्ता आहिस्ता प्ले करते हैं, तो फिर ये कलेक्टिव चेंज नज़र आता है।
और आपके केस में तो ये काफ़ी कलेक्टिव है क्योंकि माशाल्लाह काफ़ी सारे रेजिडेंट्स गुलमोहर सिटी में होंगे एंड दे विल प्ले देयर पार्ट
डेफिनेटली,
होपफुली। नदीम साहब, आपने बहुत सारी बातें हमें बताएं कि वो प्रोजेक्ट क्या है, उसके अंदर क्या क्या सहूलतें हैं। अगर मैं आपसे ये पूछूं कि गुलमोहर सिटी का आपका 3 साल का या 5 साल का विजन क्या है, तो उसको आप किस तरह डिस्क्राइब करेंगे?
अच्छा, विजन जो है वो 3 साल या 5 साल का नहीं होता। विजन जो है
मैं यही सुनना चाह रही थी आपसे।
अच्छा, विजन हमारा गुलमोहर सिटी में या गुलमोहर ग्रुप का जो है वो ये है कि हम ये चाहते हैं कि हाउसिंग इंडस्ट्री को डेमोक्रेटाइज करें ताकि हर कोई अपना घर बना सके, और हम सिर्फ घर नहीं बना सके, एक ऐसा लाइफस्टाइल लोगों को प्रोवाइड कर सके जहाँ पे उनके साथ सारी जो अलाइड फैसिलिटीज़ हैं, जिसमें एजुकेशन है, हेल्थ केयर है और इन्वायरमेंट है, इन तमाम चीज़ों को एक लो कॉस्ट में केटर फॉर करके दे सकें, और बजाय इसके कि मैक्सिमम बेनिफिट हम जनरेट करें, हम चाहते हैं कि वो मैक्सिमम बेनिफिट सोसाइटी को दिया जाए।
नदीम साहब, ये बताइए कि गुलमोहर सिटी में हेल्थ केयर और हेल्थ फैसिलिटीज़ का क्या निज़ाम है?
वहाँ पे हम हॉस्पिटल्स बिल्ड कर रहे हैं। अच्छा, हॉस्पिटल्स एक तो हम बड़े अच्छे डिज़ाइन के खूबसूरत बना रहे हैं ताकि सबसे पहले तो आप देखें यहाँ कराची में जब आप किसी सरकारी अस्पताल गवर्नमेंट हॉस्पिटल में जाते हैं तो आधे बीमार तो आप वहाँ जाके खुद ही हो जाते हैं ना, कि वो देख के हॉस्पिटल की कंडीशन। तो एक तो वहाँ पे हम जो उसका प्लानिंग है और जो उसके एलिवेशन है उसको बड़ा खूबसूरत डिज़ाइन कर रहे हैं, ये एक पहला साइकोलॉजिकल इफेक्ट लोगों पे ना जाए। दूसरी चीज़ जो है कि वहाँ पे हम बेसिक OPD अपने तमाम रेजिडेंट्स के लिए फ्री रखेंगे, और ताकि अगर कोई डॉक्टर को चेकअप वगैरह कराना है तो वो फ्री हो। एम्बुलेंस सर्विस होगी और बेसिक फैसिलिटीज़ जो एक हॉस्पिटल में होनी चाहिए वो सारी की सारी फैसिलिटीज़ वहाँ पे प्रोवाइड करेंगे लोगों को। और वहाँ पे एक अभी बनाना हमने शुरू कर रहे हैं और बाकी और भी लाइन में जिनको आहिस्ते आहिस्ते हॉस्पिटल्स बनाते चल जाएंगे।
ये आपने बहुत अच्छी बात की, क्योंकि वाकई में हम जब हेल्थ केयर का निज़ाम देखते हैं तो हमें, जैसे आपने कहा, आधे बीमार तो हम देख के और जाके वहीं हो जाते हैं। और इसलिए भी ज़रूरी है कि जो वहाँ हों उनको रियल टाइम एक्सेस मिले टू हेल्थ केयर, क्योंकि ऑब्वियसली ये एक ऐसा डेवलपमेंट प्रोजेक्ट है, जैसे आपने कहा, इट्स सेल्फ सस्टेनिंग। तो सेल्फ सस्टेनिंग का एक मेजर जो फाउंडेशन है वो एजुकेशन एंड हेल्थ केयर है। और माशाल्लाह मुझे बहुत अच्छा लगा ये जान के कि आपने वो दोनों ही कैटेगरीज को बखूबी जो है केटर किया हुआ है। सो कैप्टन साहब, अगर आपको मुझे कन्विंस करना हो एज अ कराचीआइट कि मैं कराची छोड़ के गुलमोहर सिटी में जाऊं, तो वो क्या 3 चीज़ें होंगी जिससे आप मुझे कन्विंस करेंगे?
देखिए, सबसे पहले तो ये है कि वो कॉस्ट ऑफ लिविंग इन कराची कि वो कितनी हाई है, और क्या आप उसमें इधर प्रॉपर्टी परचेज कर सकते हैं। दूसरी चीज़ ये है कि डेवलपिंग मार्केट्स, अच्छा, प्रॉफिटेबिलिटी या इन्वेस्टमेंट रिटर्न्स ज़्यादा कहाँ आते हैं? जो डेवलपिंग मार्केट्स होती हैं। डेवलप मार्केट्स में इनका स्कोप बहुत कम हो जाता है। दूसरी चीज़ ये। तीसरी चीज़ ये, जो फैसिलिटीज़ उधर हैं, अलाइड फैसिलिटीज़, बिकॉज गुलमोहर सिटी इज़ नॉट ओनली कि जी वहाँ पे हमने किसी को प्लॉट या घर दे दिया। हम उधर एक कॉन्सेप्ट डेवलप कर रहे हैं, एक लाइफ स्टाइल दे रहे हैं विच टेक्स केयर ऑफ योर टुडे एंड टुमारो इन अ सेंस कि जी वहाँ पे जैसे एजुकेशन है, हेल्थ केयर है, इन तमाम फैसिलिटीज़ को कर रहे होते हैं, और जिन इजी टर्म्स पे हम ये चीज़ प्रोवाइड कर रहे हैं। आई थिंक ये जो है ये दिस मेक्स डिफरेंस।
ये कन्विंसिंग पॉइंट्स हो सकते हैं।
अब ये तो आप पे डिपेंड करता है कि आप कन्विंस हो।
मैं काफ़ी हद तक कन्विंस हो गई हूँ नदीम साहब, एंड आप बिल्कुल सही कह रहे हैं, बिकॉज आप जिस तरीके से लिविंग का स्टाइल ऑफ लिविंग चेंज हो गया है, आई थिंक गुलमोहर सिटी इज़ प्रॉबेबली समथिंग। और आउटस्कर्ट्स में भी काफ़ी अब आबादी है कराची की, सो काफ़ी हद तक कन्विंस हो गई।
थैंक यू सो मच।
आज पाकिस्तान में हर 10 में से 9 बच्चों की खुराक में आयरन की कमी है, इसलिए जरूरी है नेस्ले बुनियाद आयरन प्लस, जो है 3 गुना ज्यादा मौसम। नेस्ले बुनियाद आयरन प्लस।
अहमद, आपने भी जिस दौर में डोमेस्टिक क्रिकेट खेली, जिस दौर में आप क्रिकेट खेलना स्टार्ट कर रहे थे, ऊपर आ रहे थे, उस जमाने में भी काफी जगहों पर क्रिकेट होती थी। ये जो दूसरे वेन्यू से, चले मैं छोटे का नाम निकाल देता हूँ, बहुत बड़ा शहर है फैसलाबाद सरहदी एतबार से एटलीस्ट, बट छोटे स्टेशन पर हो रही होती थी क्रिकेट, और यहाँ के लोगों की मोहब्बत अलग होती थी, इनकी इन्वॉल्वमेंट अलग होती है, एक फैनाटिज्म नजर आती है दीगर शहरों में। अगर हम कराची, लाहौर, पिंडी से हट के बात करें,
बिल्कुल ठीक कह रहे हैं। बहुत सपोर्ट मिली है फैसलाबाद में। हम अपनी तो बात नहीं करेंगे, लेकिन बहुत सारे इस तरह के डोमेस्टिक के ही प्लेयर्स थे जो नेशनल क्रिकेट भी खेल रहे थे। जब वो ग्राउंड के अंदर एंटर होते थे तो पूरा जो ग्राउंड होता था वो उनके नारे उनके लिए चैंट करता था, और ये कोई नई बात नहीं थी। आजकल के दौर में हम ये देखते हैं कि इस चीज को बहुत बढ़ा चढ़ा के दिखाया जाता है, फ्लॉन्ट किया जाता है कि अगर किसी एक प्लेयर के लिए नारे लग रहे हैं, तो मेरे ख्याल से आज से 5-7 साल पहले
स्क्वाड के बारे में बात करेंगे राशिद लतीफ साहब, लेकिन सबसे पहले फैसलाबाद में आज से इंटरनेशनल क्रिकेट की वापसी हो रही है, बड़ा खुशाइंद है राशिद लतीफ साहब। वो हैदराबाद हो, इन स्टेशंस को डेवलप करना बड़ा जरूरी है, यहाँ पे ग्राउंड बनाने बड़े जरूरी है, ताकि यहाँ के लोगों को मौका मिले राशिद भाई, और बड़े शौक से छोटे शहरों के लोग क्रिकेट देखते हैं पाकिस्तान के दीगर शहरों की तरह।
नहीं, फैसलाबाद छोटा शहर नहीं है, बड़ा शहर है। सियालकोट, फैसलाबाद दोनों बड़े शहर है, और बिल्कुल होनी चाहिए। फैसलाबाद हमारा एक अच्छा टेस्ट सेंटर था, इंटरनेशनल सेंटर था, बीच में बहुत सारी प्रॉब्लम आई, इंटरनेशनल क्रिकेट हमारे यहाँ से चली गई, फिर हमने शुरू की रावलपिंडी और लाहौर से, फिर कराची, और हम इसी पे ज़्यादातर अभी मुल्तान को इंट्रोड्यूस किया हमने 2000 में, तो क्रिकेट हमारी चलती है। लेकिन फैसलाबाद 1978-79 अगेंस्ट इंडिया टेस्ट सीरीज हुई थी, वहाँ पे शुरू किया था। फिर फेमस डेरा दिल्ली का आपने सुना होगा, बैटिंग पिचेज होती थी, लेकिन यहाँ पे डोमेस्टिक में जो देखा गया है, टर्निंग टाइम भी बनते हैं और मुश्किलात होती है। वैसे इसकी हिस्ट्री जो है वो बैटिंग की है। बिल्कुल आपको जो सवाल है वो होना चाहिए, और हमें अपना बढ़ाना चाहिए। कि अभी सुना है कि पिशावर का बाद में यहाँ स्टेडियम भी रेडी हो रहा है PSL के लिए, फैसलाबाद भी है, सियालकोट भी है, अंडर कमिश्नर सिस्टम आता है वो भी है, तो हैदराबाद भी है। इस तरह से हमें बढ़ाना चाहिए, अपने वेन्यूज बढ़ाने चाहिए, और उन इलाकों में जाना चाहिए जहाँ पे क्रिकेट हर कोई देखना चाहता है। और नो डाउट लाहौर का रिस्पॉन्स सबसे अच्छा होता है, पिंडी का भी बहुत ही अच्छा रिस्पॉन्स होता है पब्लिक का, लेकिन मेरे ख्याल में यहाँ का जो रिस्पॉन्स होगा ना, छोटा है, 15 से 18 हज़ार का होगा, लेकिन ये आउटस्टैंडिंग डोमेस्टिक में भी हाउसफुल होता था, और अच्छा मेरे ख्याल से रिस्पॉन्स मिलेगा फैसलाबाद से।
एब्सोल्युटली वो रिकॉर्ड ब्रेकिंग नंबर शायद हमें नजर ना आए जो लाहौर में नजर आए थे, मैं आखिरी T20 में, बट जहाँ बात शोर शराबी की हो, वहाँ पर फुल इन्वॉल्वमेंट नजर आएगी फैसलाबाद के शहरियों की। हम स्क्वाड के बारे में बात करेंगे राशिद साहब, लेकिन सबसे पहले पेशावर हो, हैदराबाद हो, इन स्टेशंस को
details and assignees created automatically
डेवलप करना बड़ा जरूरी है, यहाँ के लोग क्रिकेट देखते हैं पाकिस्तान के दीगर शहरों की तरह।
just like magic. ClickUp Chat is available now. Check it out and thank me later.
At GoDaddy, we know your website is the center of your online business. Help protect it from online threats with website security. Every GoDaddy plan comes with an SSL certificate that'll protect your customers' sensitive data, along with daily malware scans and firewall, all of which you can manage from one place. A protected site will also help your search ranking. Get peace of mind for your online business today with GoDaddy.
और हम इसी पे ज़्यादातर है, मुल्तान को इंट्रोड्यूस किया हमने 2000 में, तो क्रिकेट हमारी चलती है। लेकिन फैसलाबाद 1978-79 अगेंस्ट इंडिया टेस्ट सीरीज हुई थी, वहाँ पे शुरू किया था। फिर फेमस डेरा दिल्ली का आपने सुना होगा, बैटिंग पिचेज होती थी, लेकिन यहाँ पे डोमेस्टिक में जो देखा गया है, रनिंग ट्रैक भी बनते हैं और मुश्किलात होती हैं, वैसे इसकी हिस्ट्री जो है वो मैनेज की है। बिल्कुल आपका जो सवाल है वो होना चाहिए और हमें अपना कैनवस बढ़ाना चाहिए ग्राउंड का। आपने सुना है कि पिशावर का आपने यहाँ स्टेडियम भी रेडी हो रहा है PSL के लिए, फैसलाबाद भी है, सियालकोट भी है, अंडर कमीशन आता है वो भी है, फिर हैदराबाद भी है। इस तरह से हमें बढ़ाना चाहिए, अपने वेन्यूज बढ़ाना चाहिए और उन इलाकों में जाना चाहिए जहाँ पे क्रिकेट हर कोई देखना चाहता है। और नो डाउट लाहौर का रिस्पॉन्स सबसे अच्छा होता है, दिल्ली का भी बहुत ही अच्छा रिस्पॉन्स होता है पब्लिक का, लेकिन मेरे ख्याल में यहाँ का जो रिस्पॉन्स होगा ना छोटा है, 15 से 18 हज़ार का होगा, लेकिन ये आउटस्टैंडिंग डोमेस्टिक में भी हाउसफुल होता था और अच्छा मेरे ख्याल से रिस्पॉन्स मिलेगा फैसलाबाद से।
ये इंपॉर्टेंट डिस्कशन है बिकॉज चूंकि हम यहाँ पर क्रिकेट कराने के बारे में सोच रहे हैं। तो यहाँ पर इंफ्रास्ट्रक्चर को भी सही करना बड़ा जरूरी है। ताकि अगर फॉरेन टीम्स आएँ तो उनको इंटरनेशनल स्टैंडर्ड के मुताबिक हम ठहराएं भी और फिर उस तरह की उनको प्लेइंग कंडीशंस भी दें।
देखिए होटल तो बड़ा अच्छा है वहाँ पर और हमारे दौर में तो हम गेस्ट हाउसेस में ठहरा करते थे और जिस तरह के राशिद कह रहे हैं कि उस ज़माने में टेनिस लीली ने कहा था ये फास्ट बॉलर्स का कब्रिस्तान है, उस दौर में बड़े रन बने थे बहुत ज़्यादा। अब मुझे नहीं पता कि इसकी तब्दीली क्या होगी और मैं रिक्वेस्ट करूँगा क्रिकेट बोर्ड से कि प्लीज़ दूसरी जगह भी जाएँ, सियालकोट को भी बेहतर करें। और मैंने मुराद अली शाह साहब से सुबह भी मैंने इस प्रोग्राम में जिक्र किया था, मैंने कहा था कि सर आप इंटीरियर सीन के अंदर देखिए हैदराबाद जो है ना वो भी बन रहा है, मगर एक अच्छा सा इतने पैसे खर्च होते हैं, अरबों रुपया खर्च होता है, एक खूबसूरत से खाना में बनाएं, और ये इंटरनेशनल मैच तो सिंध की आवाम भी देख सके। सिंध की आवाम नहीं देख पाती है इंटरनेशनल मैचेस और ये आप लोगों को इसका ख्याल रखना चाहिए और सिंध की आवाम के लिए मैं आपसे रिक्वेस्ट करूँगा, इसलिए कि मुझे बहुत मैसेजेस आते हैं। तो इट्स अ वेरी गुड स्टार्ट कि कम बैक हो रहा है फैसलाबाद में। फैसलाबाद बहुत ज़बरदस्त सेंटर है हमारे दौर से, आपने सुना है कि बहुत ज़्यादा तरक्की करके बीच
Ladies and gentlemen, the next session is about to begin. Kindly return to your seats as quickly as possible.
बाबा को चूतिया बोल दिया भाई। बाबा बुरा तो नहीं मानते ना?
gentlemen, the next session is about to begin. Kindly return to your seats as quickly as possible. Thank you.
Dreaming of an adults-only escape on Booking.com? But remembered your little one's coming too? Free cancellation makes it easy to adjust your plans to fit the whole family. Booking.com, Booking.yeah.
मैं तो एक दफा भेजा एयर फॉर शेयर भी कर दिया वहां से उठा ले अबे रिफ्रेश कर सही हो जाएगा तेरे साथ कोई
चूज करें सिर्फ नेस्ले प्योर लाइफ क्योंकि हेल्थी फ्यूचर से कीमती कुछ नहीं
Welcome back. Up next, we're thrilled to have with us industry leaders coming from the two ends of the market spectrum. Their firms have been dominating forces in the public and private markets respectively and are both looking to expand into the other markets. They share their perspectives with us on this hybrid investment approach and other markets dynamics in this next panel. Let us now welcome our moderator, 𝗟𝗶𝘃𝗲 from the Hong Kong Monetary Authority, and joining him on stage, we're honored to have Jonathan Gray from Blackstone and Emmanuel Roman from PIMCO. Daryl, over to you. Thank you.
Okay, welcome back. And good morning to everyone. Welcome, John. Welcome, Annie, for joining us today. And now, this panel is about best of both worlds. And so we'll be covering both public and private markets. But let's start with something less clear-cut, which is the convergence or the blurring of the two markets. John, since you took up the current role, you doubled the AUM of Blackstone, and now you're the biggest alternative asset manager. And for many, since you took over the PIMCO role, you turned around the fixed income business, and you're now truly a bond giant. So my first question to both of you is that, okay, you seem to be doing remarkably well in your respective space, but why are you interested in the other's playground?
Oh, I love that question, Daryl. It's great to be here. Congrats to Eddie and everybody at HKMA for another great conference. I guess I'd say it a little bit differently, which is what we've really been on is a journey to expand access to private markets. That if you went back a couple decades ago, we had just a couple hundred customers, pension plans, sovereign wealth plans, funds, endowments. And what we've been trying to do is say, how can we expand the benefits of the higher returns from alternatives, the diversification benefits? What can we do? And so we've expanded with insurance clients, more institutional clients, and then in the wealth arena, the idea has been, can we create products that others can access? And so we started 20 years ago with individual investors in drawdown funds, about a decade ago in these semi-liquid funds, and now we're moving towards products that partner with best-in-class liquid managers. We've got a growing partnership with both Vanguard and Wellington in active and passive liquid, both debt and equity. And the idea is, if we partner those with our products, can you offer something really compelling to individual investors? I think it's a similar story in the 401k arena, where we're likely to partner with leading liquid providers as well. So it's not really about expanding our footprint so much into the liquid arena as it is expanding privates and what we do in order to give those differentiated returns to individual investors.
Well, thank you. That's a great story. I think the 401k was certainly something very exciting, looking forward to. So, Manny, you want to fight back, right?
Well, thank you for having me. No, I'm not going to. Let me take another stake at this. Let's say you build a portfolio right now, investment grade, you get to something like 7% yield. And the yield is a good forward predictor of future returns. So keep in mind the 7%. Now I want to increase the yield. There are 3 ways to doing it. Leverage, going down in credit quality, and becoming more liquid. There's no miracle. That's the way you get to higher return. And it may or may not be attractive depending on relative value. So John needs to borrow money for his private equity business. I don't do private equity, but he's a fiduciary, right? So he's going to try to borrow money. He's going to call his 10 closest friends, I'm one of them, and he's going to try to get the best deal for his leverage buyout. And there's a classic problem of when it's curse. And so if I can get 7.5 in direct lending in a weak single B credit, he's doing his job. I may not doing mine because I don't think it's that attractive. Right. But if I can get 10, then I think it's very attractive.
Audionic 11/11 biggest sale of the year, 80% off. तो फिर हो जाओ start and break your card.
पाकिस्तान स्ट्रॉन्गेस्ट टी अब 200 रुपए की बचत के साथ.
Attractive. And so it's all in the price, and I think you have an equilibrium where everyone is trying to do the right thing, but market prices dictate behavior, and one shouldn't take illiquidity for the sake of taking illiquidity.
So I think that's the point, that it's really about return, but for John's case, it's really about the assets by the smaller investors. So maybe before long, we're going to see tokenization of private equity in some case. Anyway, but it seems that these are 2 very different markets. So in terms of investment strategy, your philosophy, your risk management, and also, do you also see the kind of synergy or complementarity getting into 2 different markets?
Well, I definitely think there's a complementary nature of bringing liquid assets next to private assets. If you think about the liquid market is so important for investors, but the S&P 500 today is 10 stocks or 40% of the overall market cap. And we know there's obviously a lot of volatility. Sentiment moves things. We saw that certainly during COVID or after Liberation Day. Liquid markets move very, very quickly. So the idea of having some ballast for investors, institutional, insurance companies, individuals, makes a lot of sense. You know, what it gives you is exposure to real estate at much greater scale than you can get in public markets, things like infrastructure. Something like almost 90% of the private companies in the U.S. that have more than $100 million in revenue are private. And so to be able to construct a portfolio that gives you access to all of those companies and puts it side by side with your liquids portfolio makes sense. So no one's up here saying you're going to put 100% of your assets in private markets. But should you put 10, 20, 30%, most of the big institutional clients we have put about 1/3 in, because again, the premium returns and the diversification benefits. So to us, this is just sort of a natural journey. It continues to expand, but again, you have to deliver for the clients because they are trading away a measure of liquidity.
So let take a slightly different angle. In fixed income, you have a biodiversity second to none. So you have a very liquid market, you have structured product, you have asset-backed finance, you have a municipal bond market, you have more exotic type of payout like royalty finance and aviation and so on and so forth. And so at any point in time, different segment of the market may be more or less attractive depending on what the opportunity is. So I think either Ted or David mentioned before that investment grades are very, very tight. They're tight. It's good for John to borrow, it's less good for me to invest. And high yields are very expensive. You know, we have this chart which shows that between 1992 and 2008, you made 70 bips a year owning high yield. You lost everything in 2008 and more. And so we haven't seen a recession. And so to some extent, some of these returns in higher octane type of fixed income haven't been really tested. And I'm not being provocative. I'm making a very obvious point that in a growing economy, when things are good and there's no recession, things look better than they ought to on a risk-adjusted basis.
Yeah, that makes a lot of sense. I mean, in terms of allocation. So let's move on to the next question, which is about private markets. Now, John, the first question is, some say that the private credit space has been having a lot of a strong traction in recent years, and that partly has to do with the challenges in fundraising as well as exit in the PE space. What's your take on that?
I see it a little differently, Daryl. I think it really has happened because of the excess return you've been able to deliver. If you think about what private credit is, we're bringing an investor, let's say an institution, right up to the borrower, and in the process, eliminating a lot of origination, securitization, all those costs that ultimately take away from the individual, from the ultimate end investor. And so when you're able to have that direct-to-customer model, farm to table, you can deliver higher returns. For our insurance clients with private investment grade, we've been delivering in the last year 170 basis points premium. So if you can deliver 7% instead of 5%, that's very helpful. Similar story in the leveraged loan market.
My work is easy because I use ClickUp. Here's how I get perfect notes from every meeting. I click this toggle to send my AI note taker to my meetings, even if I can't attend. My AI note taker records the entire meeting and creates a full transcript. After the meeting, I get a doc with the recording, takeaways, and even the action items. AI turns these action items into tasks so we actually get things done. ClickUp makes work easy, from personal projects to running a multi-billion-dollar company. Click the link below to create your workspace for free.
यही हुआ बिल्कुल हुआ। अच्छा आप सोशल वर्क करती थी जी, फिर आप एक्टिंग में आ गई अचानक थोड़ा।
तो गाइस क्या ऑर्डर करें?
मंचूरियन,
स्टिर फ्राई और समथिंग स्पेशल, थाई चिली विंग्स। अरे यार, दैट चाइना ट्रिप वाज सो फन। हाँ यार, we should definitely go again।
तो इंस्पिरेशन
और वहाँ के ऑथेंटिक फ्लेवर्स।
भैया हमारे तो जान।
ऑथेंटिक फ्लेवर्स चाहिए, तो ये तो ट्राई करना होगा।
कैसे आ गई?
जब ये शूट से लेट आते थे घर पे, तो मेरा बस हर वक्त ये पता है कहाँ पर।
क्यों नहीं होगा? कहाँ पर?
मुझे सब सिखाया। आपने तो कमाल ही कर दिया।
कमाल मेरा नहीं, नॉट प्रोफेशनल सॉसेस का है, जिसमें है ऑयस्टर की ट्रीट, थाई चिली की हीट, केचप का कंफर्ट, फ्लेवर का बर्स्ट और ऐसी ऑथेंटिक सॉसेस जो खोले हर बाइट पर एक नई यूनिवर्स। Not professional sauces. The authentic Asian experience.
Market versus direct lending, where again, by having that direct-to-customer model, you provide a premium. So that, to me, has really been the driving force. It was certainly accelerated after the inflation surge, after rates went up and spreads widened because you got these very, very high rates of return. But that cyclical element, as it goes away, doesn't take away from the long-term secular benefits of private credit. And so I think this trend will continue and it will take up a larger component of investors' portfolios. Again, they'll still have a very large liquid fixed income portfolio, but just like they have a big public equity portfolio, they now have a larger private equity portfolio. It'll be the same dynamic in credit.
Thank you. That's the upside, but let me talk a bit about risk in the private credit space. Now, in the media interview in August, you said, and I quote, "Private markets haven't been tested." And recently, we're seeing some high-profile bankruptcy cases in some private credit-backed investments. There's even mention of the crawling little creatures out there.
Not my words.
So, what's
no, look, I think here's the way to understand it. You have a mortgage market which is super efficient. For lower quality borrower, you always had other form of financing where the credit is much worse and then the risk of fraud is higher. I mean, I was telling you when we were preparing for this that I remember a case in 1999 which pretty much looked like the one we're seeing today. Right. And so if you've been through this and you've seen fake invoicing and all of these things that we both know about, I think you sort of mentally prepare for it and you make sure that you don't do it. And so that's, I think, part number one. How many more are there? I think it's very hard to tell. I think everyone in this room scrub their book and try to make sure that, none of us are exposed to this. But it could be that one of the sector where you've seen a lot of activity, like software, for example, where AI is going to be a major disruptor, you're going to have a problem, not because anyone is doing anything wrong, simply because there's a business model that is being destroyed by technology. And I think that's, that's a Schumpeterian way of looking at an ecosystem, and I think that's, I think that keeps everyone in this room awake at night because, it's a good, bad thing in terms of what's happening.
John, you want to jump in on that point?
Well, I would agree with Manny's comment. I think these high-profile bankruptcies were interesting in that they were non-institutional borrowers. What we tend to do is lend to private equity firms or public companies. These were non-traditional borrowers. They also, it appears, committed fraud, asset-backed, where there wasn't really assets there. And then to look at that and say somehow, therefore, the direct lending market or the investment-grade private credit market is flawed, particularly where in both of the high-profile cases, these were bank-led situations, that seems like an odd conclusion. But it matters how people underwrite. And yes, you have to be mindful of what you're doing in the credit space. But I think these are both idiosyncratic. And when we look at the overall credit books of the banks, of public debt markets, of the private credit, you see very low default rates, very low losses. To me, that's more representative than a couple of these idiosyncratic cases.
Okay, thank you. So perhaps no need to grab the pesticides, at least for now. Right?
Agree.
Oh, okay. So my next question is on AI. So everyone is talking about AI. We can't avoid that. Private credit and PE, big investors in AI infrastructure, data centers in particular. But there's also increasing concern whether there's actually a bubble out there. And so there's a guy saying that, well, okay, so this time it's probably a good bubble, well, meaning that, well, the investment put into it, the productivity gain, that will actually benefit, even lasting benefit for the society, even if the shares collapsed. So do we have a bubble, good bubble or bad bubble? John?
I'm a little more optimistic. Whenever you have this kind of change, doesn't matter, railroads, electricity, the internet, there will be misallocations of capital, there will be bad business models, there will be people who lose, no question. And there'll be an excess of enthusiasm in certain areas. But the power of this technology is really remarkable. The idea of super intelligence at scale, at almost no cost other than electricity, that is really powerful. And when you start to think about the use
इनको पुराने तरीकों से ऑर्डर करने दें। 1000+ brands, more than 2 lakh grocery items और live order tracking के साथ आपका order Food Panda संभाल लेगा.
Cases in coding and customer service and content creation, the list goes on, and we're at the very beginning of these use cases. If you think aggregately, there's $60 trillion of labor spend. If this technology makes individuals, companies 15% more productive, that's $9 trillion a year. That can cover a lot of spend for data centers and for gas plants and all the infrastructure that needs to make this compute power a reality. So I'm definitely aggregately more optimistic that what's happening makes sense because the size of the prize is so large, but acknowledging there'll be losses. The other thing, and I think Manny was very smart to point this out, is that everyone's focused on this bubble over here. I think what you have to be concerned about as an investor is the disruption that's coming. It could be lower value-added IT services. It could be certain horizontal enterprise software companies. It could be what happens in the auto supply chain or auto insurance as a result of autonomous vehicles. I think underestimating what will happen, even if these changes take time and as multiples compress, as people get worried, that's the thing as investors we've got to worry about. There seems to be these days much more focus on the bubble and misallocation of capital. I think we also want to look behind us at the pace of disruption and what it could mean for our portfolios.
You also mentioned that Blackstone is actually placing AI on the top of your risk list. What do you mean by that?
Well, we're just looking at every deal that comes through the door, and we're saying in the first 2 pages of the memo, tell us about the risk of disruption. We're also looking at our existing portfolio and sort of saying yellow, red, green, you know, how much risk do we have? Is there a way to exit this company faster or this credit faster? And then I would say, in order to reduce our risk, we're also really focused on the picks and shovels. So really focused on being the biggest investor in the data center space with long-term leases, really focused on the electricity that's needed for the data centers, for the robotics, for the autonomous vehicles. So I think as investors, you want to try to find ways to play this derivatively and reduce your risk because there will be some losses.
Thank you. Manny, you just did a quick deal. So can you tell us a bit more about that? And then your thesis of investing in AI and apart from data.
Well, I think the beauty of it, you know, in terms of, I mean, and you know, I'm a little biased because we just did a deal with our friend from Morgan Stanley, a $29 billion giant, lending to one of these companies. So, you know, I may have to eat my own cooking. But the company who issued these giant bonds all have AA or AAA rating. I mean, it's incredibly safe, and because the market valuation is so high, if you plug the amount of debt being borrowed in a Merton model in terms of debt to equity, you find that it's pretty riskless and very attractive. And you know, whether they decide to go to the public market like Oracle or whether they decide to go private, we don't know. And you know, once again, they have very good and very smart CFO who are going to optimize their borrowing ability, and that may be or may not be good for, you know, both of us, and that's totally fine. The one word of caution is that we don't know what inference is going to be in terms of AI, and there's a lot of possible outcome, and I think none of us really know. And I think I would sort of caution with what may or may not happen, because the degree of certainty you have 5 years from now, it's just very hard to know where we're going to be. So maybe we're not building enough data center, maybe we're building a bit too much. Who knows? And maybe the data center, some of it will be obsolete, or maybe they won't be. And I think there's a degree of uncertainty in every single big innovation cycle, and that's one of them. And I think we recognize this, and we'll try to ride the wave as well as we can. But sometimes you ride the wave and you fall in the wave. And so that's the.
Before it's too late.
That's right.
But I think that word of caution is very helpful. We don't have much time left, so maybe just one last question, moving closer to home. So we just discussed just now while we're waiting. So the public markets here in Hong Kong and in the mainland has been doing, well, the sentiment has come back quite well. So John, how about the private market?
Well, the private market lags a bit on this because as a private investor, your time horizon's longer. So when there's geopolitical uncertainty, when there's a lack of liquidity in markets, private market participants, tend to fall back a bit. What's encouraging is the outcome of the discussions last week, where the economic tensions are starting to come down. We've definitely been believers of letting the tariff diplomacy play out, that it ultimately would settle, that it's in both parties' interests to get to a better place. The second thing is just the revival of the public markets, the fact that the Shanghai index is up big, the Hong Kong index, the IPO market here is now going to be the leading IPO market in the world this year. That signals to investors liquidity is coming back. So I think you'll begin to see more focus on private markets in Greater China. I think there'll be a lot of focus on the domestic market, on growth.
Booking an apartment with good Wi-Fi is great. Connecting with the locals is even better. Booking.com, booking.yeah.
At GoDaddy, we know your website is the center of your online business. Help protect it from online threats with website security. Every GoDaddy plan comes with an SSL certificate that'll protect your customers' sensitive data, along with daily malware scans and a firewall, all of which you can manage from one place. A protected site will also help your search ranking. Get peace of mind for your online business today with GoDaddy.
Consumption, on leisure, hotels, logistics, those things make sense to me. And I think Hong Kong will probably be the tip of the spear here in terms of the recovery. You can feel people coming into this market. The sentiment is changing. And so this place has had a tough few years, but it feels there'll be some compelling opportunities, particularly in the real estate, which I know has been badly beaten up.
Well, of course, you are a big real estate guy, so that's a good news. Many on the credit side.
Very, very simple. I think every single investor we have is under-invested in Asia for very obvious reason. If you look at benchmark, Asia is a much bigger part of the benchmark than what they invested in, and so there's a flow of money. Some of it goes through global bonds, some of it goes through global equity, some of it goes to local equity. Hong Kong is the gateway to China and to Asia. It's the center. It's where every one of us has big offices, and it's the role you play. And I think it's very good in terms of capital markets, but it's going to grow. And remember that one of the flip side of what we've seen in the US is there are some countries like Canada and Australia who have more difficult relationship with the US, where their own capital market is not big enough to be able to allocate locally. And so all of a sudden, there is some rebalancing from the US to other part of the world, and you've seen the dollar correct by 10%. I don't think it's over, but I think you've seen some smallish realignment in terms of flow of funds, and I think you'll see some of this happening here in a positive way.
That's actually very good advice for us while we and the SFC are rolling out our roadmap to really grow our bond market here. Thank you so much for the advice. Now, we're out of time. Again, thank you so much, gentlemen, for your good advice. I just hope that you will continue to capture the best of both worlds. Ladies and gentlemen, big round of applause. Thank you.
Thank you, Daryl, and our speakers. Please remain on stage for a group photo. Please look towards the back for our media friends. Thank you again to our panelists. You may now return to your seats. Thank you. The private equity landscape is navigating a period of change, with shifting investment strategies and an evolving market environment that are reshaping the competitive landscape. Let's hear from the industry leaders on their take of the stake of the private equity. Please give a warm welcome to our moderator, 𝗟𝗶𝘃𝗲 Moreira from Hamilton Lane, and our panelists, Joe Bay from KKR, Rob Lucas from CVC, and Harvey Schwartz from Carlyle. Juan, over to you. Thank you.
Thank you. Good morning, everyone. I think the job is, I'm standing in for an extension of HKMA. My job is to ask tough questions as an investor would look at this, and notice the challenge word on the title, right? Fortunately, thanks to the previous panel, we don't have to cover private credit. So that one's done. But I think it's fair to acknowledge that we have a period of transformation and change in the industry. All of us are meeting clients all the time. The first thing that comes top of mind is for the last 25 years, out of those 22 years, you outperform public equities. Congratulations. Unfortunately, the last 2 or 3, you have not. And so it's easy to get used to 22 years of one trend. What does that mean for the future? But I also want to connect that to a number of new developments in the industry, such as the development of secondaries, continuation vehicles, the explosion of a number of new transactions that are taking more and more space into portfolios and becoming front of mind. So with that as a backdrop, I'd like to go to Harvey first, since he's far out in the corner, and just can I have your perspective to kick us off on this evolution and this journey and your outlook for 2026.
Sure. Well, it's great to be back in Hong Kong. Congratulations to Eddie and the HKMA. What a fantastic event for all of us. A little bit of this has been talked about during the course of the morning. I think it was Ted that talked about the fact that companies are staying private for longer, up to 14 years. If you actually go back to you take a look at the Wilshire 5000, the Wilshire 5000 peaked in the late 90s at 7,500 companies. Today it's just over 3,000 companies. And there's this massive transformation of public companies, not just delaying becoming, private companies, not just delaying becoming public, but also not becoming public at all. And what's occurred during that period, one, as we all know, is the transformative nature of private capital. It was the complete build-out from the early days of private equity to private credit, venture capital, and the full suite of capital tools that allowed CFOs, treasurers, CEOs to actually stay private. And it was the most efficient form of capital, in addition to all the public capital they could get, whether they're dealing in the bond market, et cetera. But it really was just about efficient capital allocation. Along the way, there was a proliferation of private equity firms, and there were extraordinary returns. And if you look at the cycle, all that's really happened over the last couple of years is there was a period of congestion where capital was being recycled very, very quickly. But it's gotten a lot of attention. I actually think at this stage, the narrative is a little stale. If you see what's happening in the industry, the private equity ecosystem, if you think about private equity primary and secondary activity, one of our fastest growing businesses, as you know, is really just in the beginning of creating a more dynamic flow of capital for the entire industry. And I think when you step back, the questions we have to ask ourselves, against the backdrop of a lot of things that have been discussed today, when you think about what's happening geopolitically around the world and some of the big macro trends that we're just living through a huge shift in, going from a deflationary world to a slightly more inflationary world, global cooperation, steep inflection in technology again, the demand for capital of all forms for the next 5, 10, 15 years in the business that we're in is only growing. And everywhere we go in the world, and it was discussed here earlier today, it's about economic growth and economic competitiveness, and the demand for capital will be very high. So I feel quite optimistic. We've taken 4 companies public in the last year, largest privately owned company in Japan, largest private owned company in India, third largest private company, third largest IPO in the United States. the capital is really starting to return to the industry, but more importantly, the opportunity set going forward, because the capital demand is high and we're not seeing a structural change in how companies get capital and how they optimize capital.
That's great. Harvey, you mentioned liquidity there indirectly and speed of recycling capital. Can I go to Joe now, actually? In how do you answer that question from investors? What's your guidance to liquidity? Another statistic that is quoted, Hamilton Lane data, on a run rate basis, this industry on the PE side was delivering 23% of your prior NAV in liquidity on an annual basis. That wasn't the case last year, last 2 years. I'm sure you get this question. What's your guidance? What's KKR's guidance for that?
Well, I think context matters here. So it's hard to generalize about the entire industry because I think the bifurcation of performance is quite extreme today and probably more bifurcated than it's been in the last 10 years. I'll give you a good example. I think what's happening now, some of the congestion on the exit side, you really have to contextualize really around what happened in 2020 and 2021 and early 2022. The industry underinvested in 2020 in the middle of COVID. Capital markets were shut, a lot of dislocation, and the industry didn't lean in enough to deploy capital in that window. In 2021, with the response by governments around the world, the massive liquidity that was injected, interest rates going to unreasonably low levels at that point in time, there was a rush of deal making at high prices when there's a lot of liquidity in the marketplace. And if you think about our private equity business, you know, we're holding companies for 4, 5, 6, 7 years, right? Those deals that were done in 2021 at the peak, if you will, at high valuations with a very aggressive amount of leverage because interest rates are so low, those are the deals that are stuck today in the industry. But again, I think what you're going to see, like the firms that are doing well in this environment are the firms that were very disciplined, I think, in terms of pacing of investment in that time frame 4 or 5 years ago. You know, our deployment in 2020 went up 40% in the middle of the dislocation versus 2019. And our deployment was flat in 2021. Right, so if you look at our US private equity business in the last 5 years, for every dollar we've invested, we've returned $2 of capital to our investors. This year is going to be our big year for Asia liquidity, given the stock markets in this part of the world. Half of our global distributions in private equity are going to come out of Asia, which really speaks to the capital market development in this part of the world you're seeing. So I think a lot of what you're seeing, the context really explains a lot. You know, one of my partners recently did an interview and she said, how is it that there are more private equity funds in North America than there are McDonald's franchises? Right, and it's true. 14,000 McDonald's locations in the US and more than that in terms of private equity funds in the US. So it's hard to generalize. I think you have to really look under the cover and see how people have invested. And I think today people also talk about the slowdown in deal making and activity. I think people are resetting and trying to get back to basics. You know, valuations are objectively high today, right? People should be more cautious in deploying capital in this type of valuation environment. And there's no shortage of financing, whether it's public financing or private credit financing, right? And I think you have to be very disciplined in a market like this and focus on what private equity is meant to do, which is fundamental operational value creation in companies, bring better governance to the table, and I think that's how you're going to generate consistently and outperform the public markets.
Thank you. Rob, to you, Joe connects cycle, deployment pace, vintage. From a European vantage point, do you see any difference in terms of the point in the cycle, the level of exits and the outlook?
Yeah, thank you. And thank you, Eddie, for having us back. It's great to be here. I think it's a very exciting time at the moment, I've got to say. I think it's very hard, as Joe's just been mentioning there, to underestimate what we've been through over the last 5 or 6 years as a global economy. It's very easy to forget that come sort of February, March of this year, it'll be 6 years since COVID hit us. All the destabilization, all the volatility since, geopolitical, economic. And actually the resilience of the global economy, but the resilience of the world in which we're in, the alternatives, I think has been pretty astounding in actual fact. I totally agree with Joe that we're seeing a real bifurcation in the industry. I mean, it's always been there, but of course the more players you have, the greater the levels of volatility within the market, the more that shows through. So just taking your point about the European outlook, we are seeing strong flows into Europe, and Europe's always been a very interesting and successful place for private equity investing and alternative investing. I mean, by way of returns over the last decade, I think it might take quite a lot of people by surprise that the net IRRs in Europe over the last decade have been higher than they have in the US. 16% net IRR over the last decade in Europe versus 15 in the US. But it's even more interesting, and the key to investing in Europe, when you look beneath those figures, when you look at the amount of alpha, and alpha's been talked about a lot this morning, and I'm sure will be further. It's very, very important within our world. And if we look at what Europe has managed to produce, within Europe, half of that 16% is alpha. In the US, there have been, we know, very strong tailwinds to the US market. But that has actually meant that the levels of alpha have been 1.5% as opposed to 8%. Now, why is that? Well, the US market is a very active, very liquid market, but it's also a very efficient market. Europe is a fascinating place to invest because of all the challenges and the imperfections that the European market has. And that means that if you have players like KKR, like Carlyle, like ourselves on the ground in those local markets, the ability to produce high alpha, the ability to produce strong returns in that market is very strong. And that is what's really recognized by the most sophisticated LPs and institutional investors out there.
Just to, before I let you go on liquidity, all of you, secondaries was mentioned as well. It's front of mind. Harvey mentioned one of our fastest growing areas. The LP angle here is, are they really exits? One of the issues against Europe was that a big percentage, as much as 40–50%, were actually secondary transactions, not IPOs as much as. Can I get a quick reaction on that? Maybe you might be wanting Joe to grow your secondaries business. So Harvey, can I give a quick reaction of how you think of secondaries? It's a continuation vehicle, a true exit, yes or no?
Sure. So I think one of the things I find quite fascinating is narratives can be quite stale. I think one of the stale narratives is that there's not an opportunity in private equity because exits were slow for a couple of years, and I think my panelist partners here have covered it quite well in terms of the dynamic in the industry and what's happening. What I also find quite fascinating is that secondaries has been growing quite quickly over the last couple of years as a liquidity solution. But the industry should be evolving with liquidity solutions. I actually think this is a trend that's in the very early days, and I actually think it's quite good for the industry because I think the availability of more exits, more efficient capital allocation is only a positive. And so it was one of the fastest growing parts of our business. I think that's a sustainable trend because I think the industry sector will continue to grow. We may see consolidation. I don't know. And that was the first time I knew there were more private equity firms than McDonald's. I thought it was quite fascinating myself. But I think there'll be a tail of consolidation. There will always be specialist funds, just like there's 4,000 banks or whatever the number is in the United States, but we think of them as the people that were on the stage earlier. And so I just think that this is an early phase of evolution of the asset class where however you monetize, as long as you're monetizing with the types of returns we're talking about, then I think it's actually more proof of concept versus test of concept.
Yeah, no, that's great. Joe, then connecting, you said earlier 50% of your exit activity was in Asia. Can we go back to Asia? You've obviously built the business here, so you're front and center and it's close and dear to your heart. But how do you think of investing in Asia? How is that statistic? Can you unpack that a bit for the audience?
Sure. Love being back in Hong Kong. I spent 10 years living out here from 05 to 15, building out our business initially. So we've been investing in this part of the world for a little over 20 years now. And I would say at KKR, Asia is by far, at least in private equity, our fastest growing business. And the one where we see the most, I think, unique opportunities in this environment today. And I think that's underpinned by a number of just fundamental trends and tailwinds in Asia. There's been a lot of talk about Korea, Japan, and the real opportunities on the back of corporate governance reform. It's no surprise that the Tokyo stock market and the Korean stock market have gone up dramatically since these reforms were implemented. It's just hard to get deals done, right? But you have large conglomerate structures. You have now CEOs and boards focused on ROE. So they're selling non-core businesses, they're selling non-core assets. And we're starting to finally see a pipeline of large-scale divestitures out of companies. For us at KKR and Global PE, outside of the United States, the largest destination of private equity capital today, after the US, is Japan. And India is probably top 4 markets as well. So Asia is a huge part of what we do. We have 9 offices in the region, around 650 people on the ground, very localized, and around $80 billion of investments in the ground today. So it's that, it's corporate governance and buyouts, corporate carve-outs. It's clearly the tailwinds around domestic consumption in these key markets. 3 billion consumers, Asia's 60 to 65% of global GDP growth. As that middle class keeps growing, basic things in consumption, value-added services, healthcare, they're all going to be really exciting areas to invest over time. On technology trends, there's been a lot of talk about AI. I think that's really more of a China opportunity in many ways because, Korea, Japan have great technology, but they're short on energy, and you need both. And they're short on land, right? So China, I think, is going to be the real dominant challenger to the US in AI because they have that combination of assets to really scale AI quite dramatically. But in Korea and Japan, I think there's as big an opportunity, though, given their demographics, the aging population. They are really big leaders in robotics and industrial automation. And I think that's going to be probably in the next 5 years the bigger opportunity for Korea and Japan than just pure AI applications. And then I'd say the final thing is really around intra-Asia economic integration. Like, that's a big deal, right? Asia is trading more with Asia. China, Japan, Korea, India, Southeast Asia. Intra-Asia trade is just a little over 60% of trade within Asia. That number is probably going to 75%. So when you think about where to invest in this part of the world, betting on the region, I think, is a pretty safe bet long term.
Great. We're down to the last 5 minutes, so I'll ask the members of the panel for quicker answers on the following rounds. But Rob, Harvey mentioned, and you mentioned, Joe mentioned, more GPs than McDonald's. A fellow European, Per Franzen from EQT, said 5,000 fund managers at GPs would disappear in the last few years. Really? What's your take on that? What form could consolidation take? You acquire one firm in secondary space. What's your take from a European perspective of consolidation, and what will be CVC's approach to it?
Sure. Well, let me just go back 40 years to my first day in the office at 3i when I started my career in private equity. Hadn't been invented, so it was venture capital back in those days. And I arrive in the office, and the first thing I'm greeted with is, welcome to 3i, welcome to venture capital. You've just got your timing completely wrong, and the industry's dead. And the reason I recount that tale is because, of course, it was wrong, but also over the years we've heard a lot of times, I'm sure we've all heard, that the industry is finished in its current form. And the reason I make that point is because we should never underestimate how adaptable private equity and the alternates market is generally. And that's what's happening at the moment. We are adapting to a very different world. And it's the ability to adapt so rapidly that is such a powerful part of the industry. And so yes, to your consolidation point, there will be consolidation. And I think consolidation, as Harvey mentioned earlier on, there are going to be winners and losers within this world that we're going through at the moment, the amount of change that's going on, and the bifurcation that we're seeing. It'll all be down to performance. It's always been down to performance, and those firms, I mean, we're all fortunate to be in the situation where performance is very strong. But there are a lot of players out there where performance is less strong. And the LP community is a very discerning and very sophisticated community. And their capital will follow that success. And the stronger will, where they can really bring onto their platforms important and additional aspects, that consolidation will occur. So we acquired our secondaries business, we acquired our infrastructure business, and should the opportunities arise further, no doubt that we will acquire more. But it's also very, very important to say within that it's about culture, it's about scalability, it's about finding real quality so that we can build the businesses going forward. But I'm sure that's going to be part of it. But equally, as Harvey said, there'll be new businesses generating themselves within our environment, and so the environment is just very dynamic. And so I don't see consolidation as being in any way a negative aspect. I think it's a sign of strength.
Connecting, if I make consolidation with the conversions, also linking it to the previous panel. Harry, you started us off, closed us off on public and private hybrids. We can ask Joe, how's it going? Because you have one. But are you two looking at...
But just to emphasize what Rob said before, I was on a trading floor in 1998 when long-term capital went out of business, and a very senior person was standing behind me. I was just a kid and said, that's it. The hedge fund industry is over. The hedge fund industry sequentially has grown for almost 30 years since then. So I think to Rob's point, calling the inflection point in any industry, banking, public markets, ETFs, public bonds, these are all very, very valuable tools for capital allocation. In terms of the earlier panel discussion, and I want to leave some time for Joe, I think this is, again, not revolutionary. All of us have worked as fiduciaries for municipal workers, firemen, people in the United States for pension plans, and wealth has been a big part of this industry for a long time. It was one conventional vehicle or a wrapper. So again, I don't think this is revolutionary what's happening. This is just about asset allocation. And I could agree with both Manny in the last panel and with John about the debate around where you're going to get a better return. I think ultimately it's how people think about their own portfolio construction. But this is, again, completely evolutionary. I don't even think of this as particularly creative corporate finance. I think this is just about solving a client problem globally, whether it's wealth, mass affluent, or in the retirement channel where we've been providing these services for a long time.
Rob, may I rudely skip you and give Joe the last 20 seconds? How's it going?
It's going great. I mean, we have an amazing partner in capital, and you heard from Mike Gitlin earlier this morning, so it's the early stages of this partnership, and I think as people have said this morning, this is really about giving individual investors more choice, fundamentally, right? So if you're a doctor or a dentist in the United States, historically, you don't have a big pension plan, so you don't have access to the alts. Really what these products are fundamentally doing is democratizing access to the alternative space and giving individuals just that much more choice. So it's going to take time. This is not going to be a silver bullet, but I think in the next 10, 20, 30 years, you're going to see that wealth channel be a major part of the alts industry.
That's great. And that's a wrap. Thank you so much to the panelists and the leaders. Thank you.
Thank you very much, our speakers. Please remain on stage for a group photo. Please now look towards the back for our media friends. Thank you very much. You may now be seated. Diversification. This word has been a buzzword in recent months, but where should we diversify into? From Europe to Asia and beyond, and across different asset classes. The next panel will provide insights into where growth and investment opportunities can be found. The session will be partially conducted in Putonghua. You may use the headset in front of you for English simultaneous interpretation. Let us now put our hands together to welcome our moderator, Bonnie Chan from Hong Kong Stock Exchange, and our panelists, 𝗟𝗶𝘃𝗲 from Amundi, Ronald O'Henley from State Street, and Zhang Hui from Bank of China. Bonnie, over to you. Thank you.
Thank you, and good morning to everyone. I'm sure everyone has been enjoying the summit so far. And this panel is about diversification from Europe to Asia and beyond. And diversification is a word that we've heard a lot of this morning. In fact, I think it's prominently featured in quite a number of preceding panels. And of course, we have seen a significant reallocation of global capital this year as investors respond to many things, right? From the geopolitical side of things to macro volatility, and also as we see increasing growth and risk management opportunities. So as the world seeks for this new equilibrium, shall we say, I think we should just expect this trend of diversification to continue. So I think for this panel, we really want to look into what it means for the different geographical areas. And I have to say, Hong Kong has benefited from it. I mean, you've all heard about how the Hong Kong market has fared this year. It's very refreshing to be referred to as the tip of the spear as opposed to the relic of an international financial center. That unfortunately was a label put on Hong Kong a few years ago. So we're very fortunate today with this panel. And so without further ado, let's get started. And I would like to start with 𝗟𝗃𝘃𝗲. So 𝗟𝗃𝘃𝘃𝗃, we are seeing opportunities arising from the EU's competitiveness agenda. And I think similar to the Hong Kong market, quite a number of European markets have also done very well. The DAX have improved more than 20% year to date. So can you help us understand this? Whether you are seeing, in fact, global investors pivoting more towards European assets, and what does it mean for a firm like yours, Amundi?
Well, thank you very much, Bonnie. Good morning to everyone. Yeah, let me start maybe by drawing very quickly the European political and economic agenda to answer your question. There have been a few initiatives, 3 of them mainly, over the past few months, which I think are very interesting for Europe, and we should attract worldwide investors. The first one is the launch of the Savings and Investment Union. The idea here was to make sure that the abundant savings of European citizens can be channeled very directly and very clearly towards long-term investment in order to speed up the competitiveness of Europe and European industry and economy. The second one, of course, is around defense. You may have heard about it. EU increased its financial commitment by multiplying by 5 the budget in the European Competitiveness Fund, the defense budget. And as you probably know, we also have European countries which we committed to invest 5% of their budget in defense by 35. So this will obviously increase the valuation and the dynamic of defense companies in Europe. And last but not least, Germany, which was known for its very strict fiscal orthodoxy, has launched an ambition, a multi-year plan to invest in infrastructures. So I think all these three initiatives are going to be very good for the economy in the short term, and will be, I would say, speeding up the valuations of some company. And if I may add, two more structural reforms which are being handled on the financial area. The first one is around pensions in Europe, which is transforming everywhere. You know that the population is aging worldwide. It's specifically true in Europe, and the pension system is being reformed country by country, sometimes in a different way, but all the time with a clear vision of feeding long-term investments toward Europe. And retail participation to markets as well is being very much encouraged. For all that reasons, I think we should be comfortable and positive about the future of European economy, and we have been seen already and will go on seeing investors from all over the world participating to this growth.
Thank you. So 3 initiatives and 2 structural reforms. In fact, I always tend to think about Europe in a similar fashion as Asia, because, you know, I think both regions, we see quite a lot of fragmentation over the last few years, and therefore, if there's a chance to really have all the, you know, different countries and markets within that region, you know, joining hands, that should create a much stronger momentum. So with that remark, maybe I'll turn to Mr. Zhang Hui, and I'm going to ask this question in Mandarin. So if you need translation, please do put use the headphones.
Mr. Zhang, this morning we have listened to the leadership's instruction about consumption. Can we know your view on China's ambition to build a mega-sized consumer economy to boost private consumption? How would that affect your various business sentiments regarding your bank's business, such as retail or institutional business? What kind of impact do you think it would bring? Thank you. You mentioned that China wants to be a mega-sized consumer economy. This is not only a vision, this is also what's happening right now. From statistics, we have already seen that the first 3 quarters this year have seen a great contribution to GDP from consumption, around 53%. Up by 2.8 percentage points, and our research institute also predict that during the 15th five-year plan, that this number would increase to 60%. So it would provide a lot of driving momentum to the economic development in China. China has a great population. It consists of great potential in consumption. In the past, maybe the consumption more or less lie in the product consumption, but the next focus would be service consumption, and also consumption in some new emerging areas. As you know, that China is also going through a aging transition. have a higher growth of GDP per capita than the overall GDP growth. And the second part of your question is about the impact on our business. In the first 3 quarters, the individual consumption loans increased by 26%, and in the service area, 17%. And this has already exceeded the growth rate of our asset, which is around 7%. So it has provided a very good foundation for our business growth. We will protect this opportunity, and as you know that BOC is an internationalized bank, and we also want to utilize our role in 37 countries and regions. We already provide individual business and services to the greater Chinese community in 37 countries. And as we know that there are lots of convenience for foreigners visiting China. So now we have the tax refund business in the 19 provinces and autonomy districts. And these can provide great support for tourism in domestic markets. And we can also provide different kind of consumption loans and financing to guide or tap into the potential of consumption. On the supply side, we would focus on service-related consumption and new retail consumption, and we will provide financing support. So we can cover both the supply side and the demand side. On the other hand, we can provide asset management service to the individual consumers to enhance their capabilities to spend. So we will grasp that opportunity on that front. Thank you, Mr. Zhang.
This topic of consumption is an interesting one because, we were earlier talking about diversification. And, from my vantage point, when I look at my pipeline of companies waiting to get listed on the Hong Kong Stock Exchange, I would say half of them are in the new technology space. So a lot of biotechnology companies, specialist technology companies, AI, energy transitioning. But also quite prominently featured is new consumption, what we call new consumption, and the idea of intellectual property. Companies focused on really developing an equity story out of that concept is a growing part of the pipeline. So, I guess we should monitor that space. So let me now go to you, Ron, and let's maybe go back to the more traditional asset classes or things which investors generally consider as safe havens, U.S. Treasuries. Do you think that's really challenged as the ultimate and primary safe haven asset? And what do you consider as alternatives? Over to you.
Well, firstly, let me just thank the HKMA for yet another great convening. And your question, Bonnie, really is, I think, about U.S. Treasuries embedded in it. Is the U.S. still a great place to invest in or not? And certainly that bet has been a great bet for a very long time. If you think about performance, both equity and the Treasury markets, it's been a great place to be. And it's actually really hard to question that even now when you think about the performance of U.S. companies, the profit levels of U.S. companies. But it is a different moment right now. We've got this, you can call it what you like, you can call it a reordering, you can call it a deglobalization, you can call it a reglobalization, but both in trade and capital flows. Secondly, you've got a fiscal situation in many parts of the world, really driven by sovereign debt. The U.S. isn't the only one, but it's certainly in terms of the sheer volumes. We have a debt situation there.
And we've seen, certainly we've seen the rates on treasuries go up. And the question then becomes, is this and when you see what's happening with the dollar, is this a de-dollarization or is this a depreciation in the dollar? And I don't think we know the answer yet. My own view is that it's going to take a long time to de-dollarize. I'm not sure it'll happen, certainly in the careers of many here. But I think that the role of the U.S. and treasuries and the dollar has been, is being challenged now. But the point that I think you have to make is, how do you think about it going forward? It's been a great bet in the past. How do you think about it going forward? And while the U.S. administration isn't always the clearest communicator, I think what's the policy embedded by all the tactics that you're seeing is one of growth, and a belief that if sustained growth can be kept at or above the 3% level, that the debt situation actually takes care of itself. There's been an agenda here. The first, and we can disagree with it, but here's the agenda. The first has been around tariffs and this idea of let's bring manufacturing back to the U.S. The second thing has been about taxes. And the third has been about deregulation. The administration more or less started in that order, but now it's going on all three. And to the extent to which you believe that that can make a difference, I think the challenge for the U.S. Is that overlaying all this is an immigration policy that I think actually can be anti-growth. And if you look at the U.S. over really almost its entire lifetime, it's been fueled by immigration. In modern times, U.S. demography would look a lot like European demography, but for the fact of immigration. And we don't have that same level of immigration any longer. And it's not just illegal immigration that's being stopped, but legal immigration, including the kind of immigration that's really driven a lot of growth, a lot of prosperity, a lot of company formation in the U.S. So to me, the biggest challenge to all that we're seeing in the U.S. will be what happens in immigration, and do we have, what kind of policy emerges from that? Right now, there's not a clear and coherent policy. So having said all that, to finally get to the answer to your question, I do think that treasuries are, it's going to take a little bit more to spur buyers of treasuries. The U.S. is unlike Japan, where lots of government debt is basically bought internally. Most of the U.S. government debt is bought externally, and people and investors will be seeking a yield.
Thank you. So the jury is still out whether we are seeing de-dollarization or a depreciation of the U.S. dollars. Now, this clock is ticking rather fast. So I would like to ask a perhaps impossible question of all three of our panelists, which is, reflecting on everything that we've heard today, and the theme of this summit, tracking the shifting terrain. So just imagine you have the magic wand and you can put together a perfect investment portfolio, and let's put a time frame to it, right, for the next 12 months. What geographies, asset classes, combination are you going to put your money on? We'll start with Valerie and then on to Ron and then finally Mr. Zhang.
Well, I think that, as you know, we have at Amundi, we are a leading European asset manager. But we are based worldwide, and most of our clients are either European or Asian. So I will answer with this important DNA that I share with our European and Asian clients. What I see is that they're all questioning their US heavy exposure today. First, they've been reassessing their aging strategies recently, considering the dollar topic we just mentioned. And when it becomes too expensive, they're really looking for diversification, which is what we really advise them to do. Speaking about Asia, I think that globally Asian assets are very well positioned. The valuations are globally attractive when we compare them to in a worldwide area. Of course, you need to be selective, but Asian assets for us are a must. In Europe, I think investment-grade corporate bonds are interesting, and when we speak about equity, we always look today mostly at quality business and valuation. If I had one advice to keep is to switch from a market cap weighted portfolio to a GDP weighted portfolio. I think it's the best way today to be clever in diversifying your portfolio.
Well, I like that answer because, you know, that's a little biased towards Asia. Ron, over to you.
Yeah, I'm not going to focus on geography. There's been a lot of talk here and at every conference we all go to about AI. Is there a bubble? And it really is. If you think about where all the investment is, it's in effect been about the infrastructure and the hardware. I would be highly focused on trying to figure out who are the companies that are actually going to apply it well. The application really is in its early moments here. And for good reason, because to actually do it right, one, you've got to get your data right, and that's a combination of getting your data in order and then putting the right risk and controls around it. Secondly, then, you've got to get your processes right and re-engineer those. I mean, there's no point in automating the crooked line, as they say. And then thirdly, actually then apply it. And to the extent to which you can figure out who those companies are, and there's no reason why they should be geography bound. So I think you'll see new champions emerge as a result of this. We were talking about beforehand in the session, I actually think that for all the money that's being invested in the hardware and the enablers and the infrastructure, I don't think it's going to be the same level of investment to actually apply it. And so that's what I'd be thinking about. Who will be the new champions that are going to disrupt existing industries? Some of it will be new disruptors. Some of it will be incumbents, though. They're going to figure this out quicker than their competitors.
Yeah, that's certainly what every one of us has to think about all the time recently. So finally over to Mr. Zhang, 一个完美的投资组合
Perfect portfolio. What are you going to allocate? I think from the banking perspective, we are more concerned about the allocation of our business in different geographies. We have all along been international. When our internal environment has been changing and globalization has also impacted on our international efforts. So I can give you some figures. You would know that right now we have a low interest rate environment, and commercial banks are facing a lot of pressure. But because of our international foothold, through our overseas business, in relation to the support to our revenue and also profit, there is good hedging. In terms of geographies, we will focus on Hong Kong, of course, which is our base camp. We have been deeply rooted in Hong Kong with great level of influence for many years. We will further expand our investment into our business in Hong Kong. It's my first time to come to this summit, and that has consolidated our confidence further. We are together with many financial leaders here talking about the future. This shows how vibrant Hong Kong is. BOC Hong Kong is a platform that faces the rest of the world. And a number of years ago, well, I think 8 years ago, we have started the construction of our regional headquarters. By leveraging on the Hong Kong platform, we have been radiating our business to the rest of Southeast Asia. And this region provides very good support to the BOC's operations, and the regulators have widely recognized our efforts. So for the next step, we will deepen our roots using Hong Kong as a platform to expand into more places in Southeast Asia, and then also in Central Asia, Middle East, and also Europe. These will be our important targets looking ahead. Today, we also talked about AI investment. I think we are more concerned about investment through the LLM, but we need to shift our attention to AI plus, how it supports our industries. In what areas, through effective use of AI technologies, we can create explosive growth in our industries. I think that is the right focus. Thank you.
So unfortunately, time is running out, but I'm sure that all of our guests have really enjoyed this conversation. So once again, let me thank Valerie, Ron, and Zhang Hongzang for your time and insights. Thank you very much.
Thank you, Bonnie, and our speakers. Please remain on stage for a group photo. Please now look towards the back for our media friends. Thank you very much, our speakers. You may now be seated. Thank you. Digitalization and urbanizations have profound impact on our cities and infrastructure, particularly for the demand, generation, and transmission of energy. This panel will discuss the outlook of this sector and how investments in it could shape a more sustainable future. Let us give a warm welcome to our moderator, Neo Shen from HSG, and joining him on stage, we are delighted to have Jim Coulter from TPG, Bruce Flatt from Brookfield, and Shamara Vikramanayake from Macquarie. Neo, thank you. Over to you.
Well, thank you. I'm very, very glad to be here, and this is my 4th year attending the event. Congratulations to Eddie and the HKMN team to putting together another amazing event. I think today's topic for this session is about new energy, but broader base infrastructure. So we have a great panelist here. I don't think we need any introduction. Jim, Bruce, and Samara, I think has been actually recently hit some headline news with their respective investment in this segment. So let's start from AI, because many of those demand for energy and for new energy are actually driving because of the AI. I think tremendous of increase of capacity. So I'll start by asking Bruce. I noticed that you actually were speaking about AI data center just about last week. Yes, you were saying that we can't build enough data centers. So what's enough for you? Your research paper published recently was calling for a 75 gigawatt of AI data centers for the global and that means 7 trillion investment. That's a lot. So, sort of what's enough for you, and do we have enough demand for that? Because we heard a lot of comments in the early panel about, oh, there is this bubbleness in the AI investment journal, in journals. What's take on that?
Thanks, Neil. Thanks, Eddie, Howard, Sampson, for having me. I'd start off by just saying I think the perspective has to get changed a little. Before we built railroads, highways, all the infrastructure, water systems of the world, and what countries and companies are now doing is laying the backbone of the advanced digital economy that's coming. And when you put that into perspective, what needs to get laid down is that layer of infrastructure across the world to be able to drive business over the next 5, 10, 15, 20 years. And I think that's really what you need to put in the back of your mind. We're just laying the backbone of infrastructure, and all we've ever done in our business is just build backbone infrastructure around the world, and this is just the next layer of infrastructure. And what's really important to recognize is that it's very difficult to do what's going on. And the easy sites for data centers have been used up. Like literally every site 3 years ago that we had entitled was 100% contracted. And now it's hard work to find the next ones. And the good news though, and this is where there isn't a bubble, because every single one of those is contracted for 25 years with the best counterparties in the world. And those today are either sovereign credit, so we're leasing it to countries, or they're hyperscalers with trillion-dollar-plus market capitalizations. And that's what's different. When fiber was laid down and everyone said we had Global Crossing going to go bankrupt, and it did, there was nobody leasing the fiber. What's different today is these are all, virtually all let on 25-year contracts. So I think we've got a long, long runway to go in this, and the inhibitor is power and execution capabilities. So it's not capital.
So you're basically alluding to that hyperscaler has such strong financial power, and they have cash flow able to support it. And that's something you are better.
Yeah, these are 100% let often to very well endowed organizations which are driving enormous profitability within their businesses today, not from artificial intelligence, that hasn't come yet, but they're investing today.
Legacy cash flow.
They're spending $500 billion a year. Let's say for the next 5 or 7 years, that's $2.5 trillion. In the context of their businesses, it's not that much. And what that is laying the foundation to be able to deliver enormous profits a decade, 15 years from now. And if this all works out, these are going to be $10 trillion companies.
Looks like a good math. All right, Samara, so while Bruce was talking about not enough, you are also selling those data centers. You had actually some wonderful exit, right? I mean, last year you sold AirTrunk for $24 billion. This year you just sold another major data center for $40 billion. I'm pretty sure you have your LPs or your investors must be very happy about that. Are you also put the money back to that space? I mean, and tell us how you look at that space back many years ago when you building those data centers.
Yeah, and look, Ben Way, our head of asset management, is here with me, and we've had a few people asking us whether we've been calling a bell at the top in terms of data centers by exiting a portfolio here in Asia for $24 billion, as you said, last year, and then one in the US for 40 billion. But what I would say, I mean, there's been some really interesting perspectives given by people here both ways in terms of the growing demand, but then also the challenges with increasing technology with compute capacity and things, and will the demand be there, and the small group of off-takers there are. But I would say basically these exits reflect more the fact of the role we play in asset management, which is we start at the early stage and take things from about the zeros to the 20s, and then there is other capital that is well positioned for the 20 to 80 phase and other for the more stable 80 to 100. And so, you know, when we invested in AirTrunk, we took it from 450 megawatts to about a 1.8 gigawatt portfolio, 11 sites. We took it from Australia and Hong Kong into Japan, into Singapore, into Malaysia, and then we exited at a point where the capital required to keep that journey going was beyond the scope of our funds. And the same with Aligned, which we exited in the US. I think when we invested that one, I think we had AirTrunk for about 3 or 4 years. Aligned, we were in for 7 years. And we saw opportunity there to start very early with 7 megawatts. We grew it to 1.6 gigawatts of contracted offtake when we exited it. So we're selling a portfolio that it went from 7 million of EBITDA to 1.6 billion of EBITDA. So the people who came in are holding a more mature asset, but still scope for growth. So I think it's the role we play, and in private markets there are many of us that play different roles. There are much larger funds that hold it through the next phase. The other thing I would say is here, have 5 data center portfolios left. So even though, yes, we did start 7 years ago in this area, we've got a couple still in the US, smaller ones we're developing. We've got one in UK, Europe. But here in Asia, 𝗟𝗶 was saying earlier that China is a big opportunity. We have a portfolio in China. We have one in Korea for North Asia. So we still see scope to invest in the area. And the last thing I'd say is this digital infrastructure for what's coming is not just data centers. There's all the fiber optic networks needed for it. There's towers, there's subsea cables. So our portfolio comprises those sorts of assets as well to support this transition that's happening. And particularly, I think, you know, those of us here are focused on the Asia region for these sessions. And we have 50 portfolio companies in the Asia region. We think that there's a lot of scope here, particularly with lower risk, to keep investing.
Great. And Jim, I know you're also building massive data centers, but I want to ask you a different question. I mean, we all talk about massive capital, but what about human capital? What are the technologies going to make a difference in building those data infrastructures?
So I'm an investor, and it's always critical to get the questions right. And that question is interesting to me because no one's been asking it. So let's think about the questions we've been asking. Is it going to be big? I think we'd all raise hands. This is going to be big. Is there enough money around to do it? I was riding up the HKMA elevator, and the little TV screen said, you know, investors clamoring to get an AI. I'm not worried about money. You're right, Bruce. They've got $40 billion or $20 billion market cap. They can borrow $2 billion to do data centers if they need to do it. And is there going to be a bubble? We've asked that 5 times. Of course there's going to be a bubble. There is in every major. The idea that the market would totally land this perfectly is of course wrong. But here are the questions that are much on my mind. The sheer physicality of this, as you're talking about. So the biggest thing in real estate right now is Jamie Dimon's new headquarters. $3 billion in New York. It's taken 10 years. Articles everywhere. I'm sure you guys are doing the same thing. We have one project in Texas that is $40 billion that we're spending in the next 3 years. No one's written a single article about it. How is that going to happen? Or if you go to the high level, The 10 biggest energy companies in the world outside of Aramco are $2 trillion. Data center spending over the next 3 years is going to be $2 trillion. If data is the new oil, we've got to remake the entire energy business in the next 3. Like, how is that going to happen? And the question, I don't have a good answer, but if you ask that question, if you figure out how that's going to happen, there is massive opportunity. The second question behind that, though, that no one's asking is like, who's going to do this? All of you are looking for AI advisors. I moved in high school. The first people who want to be your friends are not the people you want to be friends with. If they are advising you and they're really good, they should be in San Francisco, because I can tell you that's where it's happening. There's $200 million pay package if you really understand. Likewise, you guys know there isn't the human capital to build a lot of these data centers. The old data centers are real estate plays. They were just hook it into the energy, hook it into the trunk. Like, these are total, we're building massive energy malls. There's only a few people around the world that these large hyperscalers are going to trust to do it. And then, are you even thinking about it right? We tend to think by asset class. To understand what's going on, you've got to have technology, you got to have chips, you got to have services, you got to have a supply chain. So this is a massively complicated set of questions, and we keep asking the same question over and over again, where the benefit is going to be in these questions that were maybe not even asked. So if you go away from this, I hope you'll actually take some questions home with you, because I certainly don't know the answer, but one of the great techniques in investing is to buy complexity and sell simplicity. So if we can buy the complexity of this market and figure out the simple answers, that's the key.
Great, and we all knew that energy is a key bottleneck of that AI ramp up, right? So Jim, I mean, when TPG Rise gets set up, you talk about green transitions, new energy investment, but clearly with the tremendous growth of AI demand, you're not just looking at new energy anymore, right? So we heard some new buzzword, nuclear, which was not the case back 2 years ago, where we went talk about solar and wind. So what are the pockets of opportunity in the new energy space that you are most excited about, or broader based energy?
All three of us will have a lot to say about this, but there's been, you need to first of all start with a totally different mindset than we all had a few years ago. So let me just go through the mindset shift that is happening. First of all, we were talking about energy transition. The key now is electricity addition. Energy and electricity are not exactly the same thing. As you guys know, in an energy transition, heat is important. Electricity has different attributes and has different winners in that. Second thing is, we were all focused on policy up through August, like what would they do with grandfathering. This is no longer about policy. This is totally about practicality. And it is no longer a religious debate over whether it's fossil fuels or not fossil fuels. It's essentially all of the above. So, you guys have a great deal going in nuclear. So it's nuclear, it's everything, because we are short electricity in the world for the first time. In the US, we haven't been short in a long, long time. And so the entire mindset has changed. And we now are going to see, just back to my sizing of this, the three biggest electricity companies in the world have a combined market cap of $200 million. And we're going to spend $200 million on the electricity market each year for the next 5 years in the US. Like, I have no idea how this is going to happen, but it's going to be interesting.
Great. So Bruce, back 2017, you bought a company called Westinghouse, which just came out of bankruptcy. Today, it's a company was just announced last week, is entering into an $80 billion contract with U.S. government, right? You're going to build a massive nuclear reactors around the world. Tell us about that investment, how that fits into your overall energy portfolios.
So we have been for 30 years one of the biggest builders of power plants. We started in hydro, we went to wind, we went to solar, and in 2017 we saw an opportunity to buy a nuclear company at a value which was how much you paid? Which was a value-based purchase. We put $1 billion of equity up, and we thought if nothing changed in the world, we'd do okay, and if odds favored that clean energy with nuclear was eventually going to come back, we just needed time. And I don't think we could have expected what happened over the last 5 years. As you know, and maybe just to step back on Jim's comment, is almost every single country of the world, but in particular in the United States, which is the largest consumer of energy, the grids are going to need to double over the next 15 to 20 years. The grids are going to double over the next 15 to 20 years. They've been flat for 25 years. That's what's going on. So the U.S. government just gave us an order to buy upwards of $100 billion, but $80 billion to start off. It might be double that of nuclear plants. And the reason they did that is because they recognize that we need to restart the supply chain for nuclear in the United States to be able to build. And we were going to build one plant on our own, finish one in the United States, but we needed 10 to be able to build the whole supply chain out in the United States. So they committed to buy these nuclear reactors in the United States. They're going to give us locations for them on federal lands, and it's going to be really exciting for the sector. But but maybe to the point, there's over 1 million gigawatts of power in the United States, and this is 20 of total energy consumed for electricity. This is 20. What the point being, we need all of the amounts of energy of what's going on because of electrification of industry, of cars, and of data centers consuming enormous amounts, and so it's a very significant thing that's going on in the U.S.
Just to size this, and I'll jump off a second. Why do you get excited as an investor? The market for energy addition has been about 29 terawatt hours a year in the U.S. for the last 15 years. It needs to be 400 terawatt hours for the next 5 years. So we have a market that needs to increase 10 times, and we have high payers coming into it who are willing to pay 2 to 3 times market to get power faster. Again, I have no idea how this works out, but this is a really interesting set of questions.
Great. So, Samara, you also put a lot of money into work in the new energy space, right? You just raised a new fund, actually, for that. Tell us, your sort of investment strategy in this new energy energy in connection with the AI, increased demand.
Yeah, and I think as Bruce said, it's not just AI, and Jim said it as well. Everything is electrifying now, so together with population growth, urbanisation, all of that, these new trends of electrification of transport, everything is driving very big demand. And I think, sadly, we're dealing now, I know previously we had a sustainability climate focus on this, but we realise now we have to thread the needle between availability, the accessibility, and also the affordability of energy sources together with dealing with the climate impacts of it. And that is a difficult needle to thread, but it's going to need massive investment, not just in generation, which is what we've been talking about, but we need a lot of investment in midstream infrastructure as well. Grid capacity is constrained in just about every market we're in, transmission, distribution, also pipeline networks. So I think it is a big area that's going to need investment. The regulatory frameworks play a role in a bunch of this investment, especially bringing on new technology where they have to catalyse private sector investment through some support, but then also the planning approvals, etc. So having a good glide path for each country is important. So I think we work also with the public sector in most of the regions we're operating in to try and think about that glide path and what role our private capital can play, but we're going to need a huge amount of capital, expertise, etc. to deliver this.
Thank you. So let's go back to the legacy infrastructure investment, Bruce. So you also invest heavily into commercial real estate globally. What is the dynamics there? Do we see that market coming back as people back to work? What's your take?
So real estate in general, it's a cyclical business. One should always remember that. And there are two things that happened this time versus others. Interest rates went up quickly, and people, their mindset changed that people were not going to go and be in places. I think those are the two fundamental things. Each cycle is different, and this time it was those two. On the opposite side, fundamentals of most real estate in the world, Hong Kong a little different because the leases are short, but in most other places of the world, fundamentals are really strong. So you have underlying fundamentals are strong. What happened was the psyche of lenders and buyers got messed up, and interest rates went up quickly, and that affected financing. What's happened now is that interest rates are coming down. Everyone understands, everyone's going back to the office, and all other forms of real estate are in excellent shape. What you've seen now is in most cities in the world, there is no construction going on, and there is no space left, and rents are going up. Rents have doubled in New York in good buildings, and they're going higher probably by another 50%.
What about Hong Kong? You're here, so what's your outlook for Hong Kong?
Yeah, so Hong Kong, here's what I'd say. There are greater experts in this room on Hong Kong real estate, but I'll make one broad observation. This is in all value investing in real assets, but in particular in real estate. If you have businesses or cities that are great places, Hong Kong qualifies. And if you have a tough market where things are down, they come back fast. And Hong Kong's turned, and there's very little construction. It's a very constrained place, and real estate values here will come back and be at their peaks at some time in the future.
Great. I hope that future is very close. All right. So
I wasn't talking about your apartment.
Okay. So one last question for Samara and for Jim, right? So we talk about data center, energy. It seems to be that we're assuming there's unlimited capitals available out there, right? But in reality, who's going to fund those big investments? We knew that institutional investor has always played a very important role, including the sovereign wealth funds. But is retail have to be part of that picture, and how we look at that sort of, the supply side of the capital?
Okay, sure. I'll go first. So look, basically there are hundreds of trillions of pools of savings in individuals, in institutions, in governments out there in the world. And I think what we do as asset managers is we connect those savings with investment opportunity where we have expertise to deliver superior risk for the return. What we've been seeing is that pools of saving moving much more from markets like equities and fixed income into private market type assets, the less liquid assets. And that is happening initially through the institutional channel, but now through the retail channel. There are growing mechanisms, intermediated wealth, or now we talked about the 401ks in the US to allow retail to access this. Also, insurance is looking to allocate more to these higher return potentially, but more illiquid and maybe more complex risk assets. So I think what we do is act as intermediaries where we each have our expertise to bring those pools of capital to investments through unlisted markets, listed markets. I mean, Bruce, you have a structure with listed entities at the top using listed markets. A lot of people use unlisted. We're moving more into insurance and wealth. And I think basically, the allocation overall is shifting where people are getting more comfortable taking the risks. Now, we do have to think about the illiquidity risk, particularly as we do this with unsophisticated investors, and make sure they're looked after as they go into this, but I think we are seeing more allocation to private markets. And I'll let Jim have the last word.
Jim?
Watch the private markets here. If you remember the 2000 tech bubble, we were actually right that the internet was big, but too much money was trying to go into it. 20 pounds of money was trying to go in a 5-pound sack. Same thing might be happening in the public markets now. But while that public market bubble happened in 2000, over in the private markets, we were creating Amazon, Google, later Facebook. So the business models are what to focus on here. Who has the best business model? If there's a good business model, capital is not the thing I worry about.
Great. So we're running out of time, and let's put our hands together and give this 3 panelists a round of applause. Thank you.
Thank you very much, speakers. Please remain on stage for a quick photo. Please look straight to our official camera. And now it's towards the back for our media friends. Thank you very much, speakers. You may now return to your seats. Technology is set to transform the financial sector. Our next panel will explore how the latest innovations will disrupt and revolutionize the way financial services are delivered and what the future holds for industry as a whole. Let us give a warm welcome to our moderator, Ernesto Torres Cantu from Citi, and our panelists, Jenny Johnson from Franklin Templeton, Danielle Pinto from JP Morgan Chase, and Bill Winters from the Standard Chartered Bank.
Very good. Good afternoon, everybody, and thank you, 𝗟𝗶𝘃 and Eddie, for another wonderful event. Being in Hong Kong for 123 years, actually, Citi, we've been, witnesses to its transformation, its innovativeness, and adaptation, which is certainly happening again. And talking about technology, and given that during all morning we have not spoken about AI, we wanted to take it to Ron's comment to the applicability, more than the evaluation, et cetera, in that sense. And let me start with Jenny. Jenny, how is AI transforming, business operations at your firm, and what strategic considerations should companies keep in mind to stay competitive in this field?
Well, I think if you're not thinking about how AI is transforming every part of your business, you're not thinking broadly enough. And I almost think you have to think, what is AI not going to do in my business that we can add value by doing? And so, the challenge always with technology is the first thing that anybody looks at is you make more efficient what you do today, you get the tool in the hands of your employees, and then they start to give you ideas about how you can really make the next level of change. So right now, we're at that stage of figuring out, okay, how can we be more efficient? RFPs used to take us 18 hours to do the first draft. It's 14 minutes now. From our investment teams, if you think about it, an investment team has 3 decisions: buy, sell, size. And so we've created models within our investment teams where you put in the team's philosophy, you're looking at historical trades and data, and then as you're making decisions, it actually can challenge the investment person. So the research analyst, you know, well, you actually say this, but now you're recommending this because there's always biases. On distribution, it's about how do you optimize the time of your salespeople. So who are they visiting, and are they having the best conversation? And all that, you obviously have the data internally to provide those insights. It takes time to hone the models, but we're looking at, you know, really every part of our business, and obviously technology, creating code, every part of our business to try to push it forward to leverage the technology.
Thank you, Jenny. Daniel, in same concept of applicability, and also how do you see it evolving to just a productivity enhancement tool, or more than that?
So I think that as a big company, traditional company, so the way to succeed, in my view, is to look at, as Janie said, every part of a company will be challenged or transformed. But then how do you think about it? In my view is you have to think if that piece would have been AI native activity, how you would do it, and then try to get the organization to move exactly that way. So we started investing in AI like 10 years ago, and the bulk of last year, we do measure the value more or less, and we got around a couple of $2 billion in value, either cost savings or losses being avoided or revenues being produced. And that number is being growing roughly at 30–40% a year. And I think that it will accelerate. But the bulk of what happened so far is traditional AI. We are now seeing the beginnings of the increase in productivity driven by large language models, and probably the next step will be agents and how those are going to increase not just productivity in operational processes, technology, call centers, but things like in research, enhance the capabilities of our researchers, in bankers, particularly junior bankers, that they can become a lot more productive and go and face clients a lot sooner, that instead of doing presentations that can be done, or filing things that can be done by technology. So I think that this is very transformative. I think that increasing productivity will increase the ability to customize client experience, develop products, target marketing, create client experience where the client group will be one client, and to make it really make the best for that particular client is going to be very transformative. And we are essentially at the very beginning. So I see a lot of growth, top line and bottom line, going forward.
Bill, and I see you agreeing with Jenny's and Daniel's comments. No? Do you see the impact in the medium term, like it has been suggested in other panels, etc., or short term and immediate?
Past, present, short term, medium, and long term. I think all of the above. I do agree with Daniel and Jenny on everything that they said. I think including the fact that we were engaging in AI before we called it AI. We called it data analytics, and we used it for fraud protection and transaction monitoring and name screening, and the sorts of things that large language models were very useful for. But I think, like a lot of us in the corporate world, we got excited about the technology, and you go back 2–3 years, we looked around the bank and we had thousands of data scientists and literally hundreds of AI use cases. And we then took a pause and said that's probably hundreds too many, given our ability to focus on a few things that really matter. So the approach that we took at Standard Chartered was to say, at our core, we're a bank that focuses just on two things. We're actually quite simple. We focus on the cross-border needs of our multinational clients, whether those are financial institutions or corporations or governments, and we serve the affluent populations in the markets in which we operate, which are mostly Asia, Middle East, and Africa. And my challenge to the team was, how many of those 400 use cases are existential for those two sets of activities? If it's existential, we better develop it ourselves and be very good at it. If it's not, we can get it from somebody else, or we can wait a little bit and develop that ourselves. So it's been hard to train people in on 7 to 10 top priorities for us rather than 400. And I can tell you the 400 would have gone to 800 within a year had we not channeled a bit. Now we'll get to the 800. Many of those you can get off the shelf eventually. It might not be absolutely best in class, but it doesn't matter if it's not existential for us. If it's existential, like my nightmare, and I find our head of retail is sitting in the room right now, the nightmare for me is to wake up one day and find some really zippy fintech who's built a much better robo-advisor that can displace our RMs in an RM-led wealth management distribution model, which is highly successful for us. So if that's your nightmare, then you better have something that is keeping pace with the nightmare. That's what we've done. That's what we're doing. So we've got an excellent, I call it AI augmentation tool for our relationship managers to make them, position them as best in class. And at some point, as appropriate, we'll expose our clients to those tools. But only when they're ready for it and when we're ready for it, which is not today. That's the medium and the long term.
Very good. Thank you, Bill. Now let's move on to the other big trend, stable coins and digital assets. Jenny, you've spoken quite a bit, and clearly about the potential for tokenization and blockchain technology to transform financial services and your industry in particular. What operational challenges need to be addressed to truly unlock its potential?
What operational challenges? Well, so number one is that you have a bunch of different blockchains out there that aren't all integrated, so integration's one. Number two, so we rolled out a natively on-chain tokenized money market fund in 2021. We're fortunate in that we picked a chain, Stellar, that optimize what we were trying to do. If we had picked other chains, it would have been much more expensive, potentially more expensive than our existing money market funds. So you got to pick the right chain. There's some people that are concerned about the number of transactions per second, but actually there's certain chains that are optimized for that have that are faster than even Visa and MasterCard process. So you're working through a lot of these. But the biggest issue is probably most people don't have a wallet. You can't really hold a token if you don't have a wallet. I'm always hearing about alts managers say, can't wait till blockchain can democratize alternatives. The reality is that technology exists today. You don't have market makers. You don't have the infrastructure around it. And honestly, today there's almost two worlds. There's the TradFi, the traditional finance world, and the digital asset world, and they're only now beginning to kind of come together. And as that happens, a lot of the traditional learnings that have happened will be brought over and much more professionalize, I think, what's existing in the digital assets. But there's no question, I fundamentally believe the infrastructure and plumbing of financial services will be replaced by blockchain.
Quite a statement. Daniel, your firm's perspective on digital assets has evolved significantly in the last years. What prompted that shift or change?
The reality that it hasn't. So obviously, you know Jamie's views on Bitcoin. That is, and he was very clear. These are personal views. For me, Bitcoin is is transforming into an asset class. My concern about Bitcoin was more about if you start losing keys, so keys get stolen, it's going to destroy the confidence of this as a class. The reality, a lot of keys were lost and stolen, and here we are. So it just became an asset class that is never been is a place to store value. If you believe that you will sell it at a higher price than it was, it's not a method of payment because it's slow and expensive. So it is what it is. And I think that in the big scheme of things, Bitcoin is very relevant. But the technology is, I've been working for many, many years. We launched the JP Morgan coin in 2019. But everything that the industry have done is even private networks like the JP Morgan coin, that is a very, very effective tools for clients to optimize the flows of funding, program payments, and do instant effects. And many clients are using it, working very well. We have done with Bill and other banks the Patriot program that is a 24/7 network of transferring payments among banks, led in Singapore. So we have done quite a lot. And now we are at the point where we start experimenting with tokenized deposits, start experimenting into the public chain space that Jenny has mentioned, with essentially white label clients that you are approved your part. It's not that you put your coin there, your token there, and see how it goes. I think that is the next layer. I think that tokenized deposits is an effective way to make a bit more interoperable the banking sector with the crypto space. The digitalization of assets is going to start growing. The issue in the banking sector is regulation is a big challenge. When you look at the Basel regulation and their interpretation, essentially prohibit banks to be in a public chain because the capital intensity is so huge that it makes essentially not possible to do that. So the Genius Act in the US for stable coins of certain characteristics is not going to follow, apparently, the Basel. So in which case it's possible, and I think that there are a bunch of use cases of stable coins that they are obvious, like cross-border, small value, cross-border payments. It may be a challenge for some of the existing payment systems that exist today, like credit cards or debit cards. So I think that this is, and the technology is evolving. As Jenny said, Bitcoin is super slow. Ethereum is a bit faster but relatively expensive for low-value payments. Then there are other networks that they are evolving, that they are very, very fast, but they have other challenges. So as technology evolves, I think that it will be a challenge for the existing railways in payments, maybe a challenge for the way that we trade in markets as it gets digitalized. So I think that is something that is real, and it will take time until banks and at the proper regulation for banks to be part of this ecosystem in a substantial way.
Bill, you've been quite outspoken about the potential for stable coins and tokenization. The market is small now. What would it take to go to the breadth and depth that you see in the future?
The market is small today in traditional finance. It's there's trillions of dollars trading in the DeFi world.
I think there were $27 trillion last year traded in stable coins. That's more than Visa and MasterCard combined. It's not that small.
Carry on.
Yeah, good answer.
No, that's all good. I was defending your point, Bill.
We always agree. That's a problem. There's a ton going on. Obviously, it's anchored in the crypto world, and that's where it started, and it's growing. And as Daniel said, the technology is the same. It ports from the crypto world into the TradFi world. We're at the earliest stage of the incorporation into the TradFi world, and I think it's inexorable. I think money will become entirely digital over a period of time. That calls for an entirely new infrastructure, which is being built. It will grow out of the crypto world. It comes with tons of challenges, and how we get from where we are now to where we're going to end up is a huge open question. None of us have any idea exactly how this will evolve. And I think all of us have a high conviction that it will, which means that we need sort of hand-in-hand cooperation with regulators and with each other in the market to create an infrastructure that's safe. And I'm going to be super sycophantic because, well, for two reasons. One is we're regulated by the HKMA. It may surprise you to know. Our name is on the banknotes. We care a lot about what happens in Hong Kong. And the HKMA has been super progressive in this area. Not because Eddie and Arthur and team have any better idea exactly how this is going to develop, but because we just know what it is. So we're going to have to try different things. So tokenized bank deposits here in Hong Kong dollar stablecoins, maybe at some point a structural connection through to the RMB. Obviously not on the agenda at the moment, but it could be, and this would be a really natural place to experiment in that regard. And I think that's the way to progress from here is a little bit trial and error where the errors don't cost you the system. And but the use cases are developing around us in an incredibly fast way. And the non-bank players, of course, I completely agree with Daniel's observation about the Basel rules. I think it's almost insane to allow a financial system to grow out and intentionally keep the banks outside of it. So the one entity that regulators can look through and see through and understand where the systemic risks are building up or where the operational risks are building up, that one, like we're spies, right? That's what we do. We watch markets, we report back to the regulators. It's insane to keep the banks out. Now, the HKMA obviously is bringing us in as progressively as any regulator in the world. Maybe that's going to happen with the Fed. Maybe it's going to happen with, as the Fed and the US regulators promote post-Genius Act reforms. Other places like Singapore are doing their bit. But the opportunity here is to bring the banks into the system in a safe and sound way, lest we allow the system to get too big without decent oversight.
Thank you, Bill. Let me go back to Daniel on that. If we see that moving forward, what does that do to the traditional model of financial intermediation for banks, etc., and how are you foreseeing that?
Well, as I said, I think that on the payment side, assuming that there is some way that regulation is not too fragmented, I think that it will have a role, stablecoins will have a role in very fast, very cheap, very effective global payments and transferring money from one place to the other. I think that tokenization of deposits, or tokenization of assets, if it gets to a point where it's properly regulated, is within the regulated space and is done at scale, it will change what are the current rails that we use today as in payments for markets. So I think that is way too early to know. But it feels now that probably the tide is turning from being something that we've been experimenting for years and years and doing little things. I think that now is getting to a point where most likely will escalate and hopefully escalate, as Bill said, within not just in the unregulated space, allows the regulated entities to be an important player. So therefore, if everyone will be safer in that space and we avoid the problems that we normally have when new things come to the market until they settle down. So we will see. It's still a long way to go, but I think that is real now.
And Jenny, how do you see bank and non-banks working together or not enough to unleash the stable coins, tokenization, etc.?
Well, I'd rather talk about blockchain than just stable coins, because I think stable coins is one, it's the current use case, but there's so many other use cases. So just kind of the question on sort of how does this impact banks? You know, if you think about today, what does this technology do? This technology has an immutable record of who owns it, right? So huge amount of money is spent in the industry reconciling data between systems and then reconciling data with the counterparty. There you have one source of truth. You know exactly when it's relevant as soon as a transaction. The smart contract can trigger it and you get paid. So if you have atomic settlement, which means you get paid, you don't have to worry about who the counterparty is because it's wallet to wallet. I don't need to go to JP Morgan Chase to do a foreign exchange contract and worry about who the counterparty is. If one, the counterparty's wallet has been approved, whitelisted, and my token can only go into that wallet, and two, the smart contract kicks off and makes sure I get paid. So there's a lot of toll takers in transactions today that get eliminated once the ecosystem is rolled out. And if you're like a title company to prove you have that somebody has ownership on a home, and it gets on the blockchain, you don't need to worry about going out and validating that. So I think you have to look at, you know, a transaction and say, where am I adding value and where does this eliminate? And it'll take time to happen, but I think because it drives down costs, it's much more efficient, it will inevitably happen.
Very good. And one last question, Bill. You talked about cross-border. And part of this proliferation, if you will, of each jurisdiction constructing its stable coins has a couple of things. It's the reserve currency of one or the other, and its interaction for cross-border payments, etc. How are you seeing that, Bill?
I think that's first of all, as a toll taker, I'm sure that Jenny had me and Daniel in mind.
You know exactly where you're relevant. You'll continue to be relevant in those.
The cross-border payments are the obvious use case because they've certainly for other than very sophisticated institutions, they tend to be slow and expensive, and less and less slow, less and less expensive, but nevertheless not 24/7 real time. So a lot of the use cases today are, for example, port operators who want to get the ship out of the dock on a Saturday, and they don't want to have to wait until Monday or Tuesday when the payment clears. Very, very simple use case, but a cross-border payment. It could also be a local payment. In the absence of any regulation or in the absence of any alternative, those transactions will be, the cross-border payments will be conducted using US dollar stablecoins, right? Because they're there. There's 280 billion of them out there. They're very liquid. The people that care already have a digital wallet. They can use those stable coins. But that isn't the world we live in. There's regulation, and many countries said, no, you can't, either a bank can't hold a stable coin, or a user can't use a stable coin, or you don't have a local license to engage with a local player. And that, so regulation, as is frequently the case, is the protector of the incumbent, and the incumbent is frequently a bank. So we get to charge a little bit more and be a little bit slower for a little while longer. But water, makes its way through a rock eventually, even not so porous rocks. Eventually, it comes out the back end. By the way, it comes out clean. It's been filtered along the way, and so I think it is again inexorable that the digital asset-based or blockchain-based payments will make their way into the real economy. It's just a question of how fast, and we should be more thoughtful, and I think the HKMA is thoughtful, about how we shape that outcome rather than let it just happen.
Absolutely. Well, thank you very much, everybody. One thing is clear from our conversation is that we're not talking about the future anymore. This is present tense transformation in all of these topics. Thank you very much, Jenny, Daniel, Bill.
Thank you very much to our speakers. Please remain on stage for a quick photo. Now, please look towards the back. Thank you very much. You may now return to your seats. Thank you very much to all our speakers this morning for their sharing. Lots of food for thoughts as we go into the lunch break. Ladies and gentlemen, please enjoy your lunch, and we'll be returning to the stage again between courses for remarks by the Hong Kong Financial Secretary and a fireside chat. Thank you. Ladies and gentlemen, lunch will be served at your seats. You may remain seated, and your lunch will be brought to you. Thank you. Ladies and gentlemen, we're serving the appetizers. Please get seated. Ladies and gentlemen, we're going to serve the appetizers very soon. You may now return to your seats. Ladies and gentlemen, we're going to serve the appetizers very soon. Please can you return to your seats and enjoy the lunch. Ladies and gentlemen, we're going to serve the appetizers very soon. Please, may you return to your seats and enjoy the lunch.
So I know that there's a great emphasis here in Hong Kong on the regulation of the systemically important banks. That's actually very important to every single market participant. Thoughtful regulation of banks around the world